make trading as your career, go whatever you want to do. But day trading, in my opinion, is waste of time. Long-term investing, this is not something I'm very good at, so I'm not going to cover. We will start buying in. Then again, let's take Nvidia as an example, right? Once the AI boom started, highs in July, and after that it's consolidating sideways. Now everyone starts asking the question, okay, is AI a bubble or is AI going to sustain forever? So if this is what is happening right now, let's say if big players think that AI is a bubble and Nvidia, I mean, let's say there is not much growth they expect, we might see this thing. Or if they think that, okay, no, this Gen AI is going to stay forever and there is much more demand for it, maybe we'll start with another FOMO cycle from here. So we don't know what is going to happen. So we just need to be mindful about in this period whether it's going to break down or it's going to break up. So this is my own interpretation of the market cycle. Okay, technical analysis. So I split my my presentation into multiple sections: technical analysis, then the trade management, options trading, and I think there is one last section. Yeah, in between somewhere about I'll talk about risk management. Yeah. So a lot of people might ask why. I think today that question came in the stocks group. So hey, we have Rama, we have Balu, who are putting out alerts. Why do we need to learn technical analysis? Can you go to the next slide? So yeah.
Slow
This is Rama. If anyone.
మీ చైర్ కొద్దిగా లాగదు మీ చైర్ కింద నుంచి అయితే వస్తుంది ఇంకా యా
So you don't want to be in this situation, right? So if Rama takes a break or Balu takes a break, you don't want to be this guy. So it's better to learn on your own and be ready. So.
Actually, I took a break from trading. In India, the big two corrections happened. So,
Okay, guys. Let's get on to only Praveen.
yeah, sure.
Okay, so why technical analysis is important?
Video record.
I want to talk, give motivation to through a couple of charts and then we'll dive deep. So this is Tesla stock. I think I shared when somewhere Tesla was around in this area, said that hey, this is a weekly chart. Tesla has been consolidating sideways for a long time, so it is going to break out. I don't know about at the time Trump winning all that, but these things happen. Technical analysis takes you to a place where things might happen. Then you need the support of fundamentals, news, or any other catalyst for things to happen. So if there was, let's say if Trump didn't win, it might have consolidated for another couple of years. We don't know. But what your job is to be there at the right time and wait for things to happen. If things doesn't happen, you should exit. Again, I'm going to talk about that next one. Again, MSTR. When the stock was doing this, I shared it in the group that hey, the stock is consolidating between these two levels. So whenever it breaks, it will do well. I didn't expect that it will go up 200%, but that's how it is. So if your job is to be there at the right place at the right time using the technical analysis and let the market take over. Again, Trump win, help with that. Okay, so I was asked to focus mostly on simple basic analysis. That's what I'm going to do, and all the things I'm going to talk about here is what I practice in my day-to-day or week-to-week, and you will see all these things repeating in my charts. So starting with support and resistance. Support is a place where the stock comes down takes that as a base and reverses to the upside. Resistance is a thing where stock keeps moving up, stops at a place, and then reverse down. So it's simply support and resistance. What is a significant move? Typically 2 to 5%. You don't want like 0.1, 0.5% move considered as something significant. So I'm going to use examples from this year, all the things that I shared in the stock hypothetical, but I want in this session I'm going to use. So this is the snow analysis I shared. We'll revisit this in the future also. But the one thing I want you to observe is this green line. Can you go to next? I think there is a, yeah. So yeah, this green line, it's actually all-time low. When I shared this around this, saying that hey, snow is hitting this all-time lows. So maybe there is a chance to reverse. So again, in technical analysis and trading, there is no certainty. It's all about probability. You betting on the highest possible outcome. Also, you have an exit plan if that doesn't work. So, so in this case, I mentioned that hey, snow is trying to move up. It's keep failing, but all-time lows is basically the stock never went below that in its lifetime. So it's a significant level. So maybe there is a chance that it can go up. And I use different technical indicators, which I'm not going to talk about today because I covered this in my technical analysis session. So I used analysis on technical indicators, say that hey, why I think that this might be bullish. Next. Okay, so I think this was around sometime here. Then earnings happened. On the day of earnings, we know what happened. Snow went up a lot after hours. Then people ask me, hey, okay, now that the support proved that it worked, now what is the resistance? What are my targets? At that point of time, I think snow was trading above 150 or something after hours. I said like, hey, these are the two zones or resistance. How did I come up with? When I introduced support and resistance, I said significant move. So let's take this. From this is around 190. When stock touched that, it went down almost 20%. So 20% for any stock is a significant move. When the stock touched this level, again it went down 15 to 20%. It made a significant move. So that's what is important for us to identify those levels. Or in simply like this is sticking out of all the candles, this area is sticking out. Other important thing is it's a zone, it's not a level. Even a support is never a level, it's a zone. It can exactly touch here, or in this case it went down and then from there it went up. So support and resistance is never a line, it's a zone. So next. Okay, now the next day what happened? Snow directly opened up in our first resistance zone. Again, this is a great outcome for anyone. So anyone who bought around here, around 113, 115, 120, it is already at 107, great outcome. But from a technical analysis point of view, at the end of the day, it closed above the resistance zone. So which is showing that there is a strength in this move, because there was a resistance zone and the stock break above and went up above the next. So once a stock goes above resistance, it becomes support. So resistance I'm showing with red box, support I'm showing with green box. So very simple. So once a stock moves above resistance, support aside, and I did a retest of the zone. This is very important. What happens again? It shows that it retested this zone and it reversed immediately, which shows that okay, there is appetite in the people to buy this. They are not even letting it go below. If it would have gone below this zone, I would have been bearish. But it went below. It always stayed above that, which is again indicating that there is an appetite for more snow. Now, when it is here, then the next target is always the next resistance. Look at this beauty. So it immediately went within 2-3 days, touched the resistance zone. But in this case, it was unable to break the resistance. So next please. It failed at the resistance, it came back to support again. This is yesterday, I think Friday's status. So again, this is how technical analysis work. When I put this 2 levels on the day of when the innings completed, I didn't know that it is how it is going to act. But it's not me who is doing that, it is the market who is doing that. Our job is to identify these levels, be ready with our plan to do that. So if someone wants to enter a trade, they had lot of time to enter a trade here. Let's say they didn't enter because there was so much bearish news, etc., and there was earnings, etc. They couldn't enter. This candle, when it touched the support and went up, that was the second time they could have entered. Why? It indicated that there is appetite for the market. There is strength. Now when it failed 3 days, try to break above and it failed. I think that would have been a good point to exit the trade. Or if you are bearish mindset, you could have shorted the stock, or you would have bought a put for a downside. Again, this is giving us an opportunity for today. So if you want a trade ready for next week, why not snow? So again, I'm going to talk about this in a trade plan. How do you come up with your own trade plan? Okay, now everything doesn't work in the market. We always think that when we look at the positive examples, we forget that things can fail. So there is this yellow lines or orange color lines I added, where they were also supports. Let's assume this price action was not there. When it came here, stock didn't even touch, but it went up. Again, this is my custom indicator. You don't need it. You can use you can put a SMA or something and it will act as a resistance. So snow couldn't move here. Same thing again, the support acted, but it couldn't move up. Again, it moved let's say this is 125 to 140, 15 points on a 120 stock is 10% move. Again, it's a significant move. It did move up, but so all I'm trying to say is not all support levels provide you the move what we saw at all-time lows. So you need to be ready for that. That's basically what I'm trying to depict. Next. Okay, that's about support and resistance. I want to talk about trend lines and trend channels. This is the Tesla stock chart we saw in the beginning. This is actually Tesla monthly chart. Again, I shared this in the stock group saying that, hey, this looks bullish. Why? So there are two trend channels here. This is the uptrend and this is the downtrend. In an uptrend, the price keeps touching it and going up. In the downtrend, price keeps touching it and going down. So that's basically defines the uptrend and downtrend channels. So how do you play this? So let's assume this wasn't the case. Every time it touched here, you could have bought the stock. Every time it touched here, you would have sold the stock, right? Very simple. And to create any trend line, all you need is the 2 points. So in this case, let's say we started from here, this point and this point. That's all. All you need is the 2 points to draw a trend line. Similarly, if you started from here, this and this, all you need is the 2 points. But see how many times, this is the third time, this is fourth time. Here, 1, 2 you draw, but 1, 2, these also you can consider 3. So in this case, it tried to go up, but it failed. It's called failed breakout. Not every time market gives you golden opportunity. So like this, okay. So next. Okay, here again, I just wanted to show you both in combination. We have these purple ones are the older trend lines, but now we are looking at a period on a weekly chart. So this is also again a chart I shared in the group. There was a horizontal resistance here, so that again acted as resistance multiple times. The second thing is, even when you have these kind of long-term trend lines, you can draw the short-term trend lines like this and use. So this was a situation a couple of weeks before earnings. Price tested this downtrend line. So previously it failed here, but in this case we don't know what is going to happen. So next we'll see the story how it. So the next week again this was tested. I think it went down on some bad news. I don't remember what was the news, but it went down on some bad news. Again it tested that this is a weekly candle, even though it's very small. So it tested that and still held. So this is still bullish. Why? Because it's above the trend line, it's still bullish. Next, the third week, what happens? It tested both the trend lines, the short-term one I created and the long-term one which we saw in the previous graph. It tested both of them and still held, and then it went up. I think this was probably after earnings move, where it went from 210 or 215 to 260. Again, the power of simple lines that you can draw on a chart. Next. So again, when we see positive examples, we think that everything will work. That's not the case, but because can you go back a couple of charts? Yeah, one chart. Yeah. So this is, I'm talking about this area here. Your job is to be ready for both the outcomes. If things work in your favor, great. If it doesn't work in your favor, you need to be ready to get out of the trade immediately. There are no emotions attached to any trade. No trade defines you. Trade success doesn't define your success. So just get out of it. That's it. Simple. Next. This is the latest S&P 500. We are talking around sometime around October timeline. So because this is a resistance one, I put it in pink color or purple color, and this is I put it in teal color here. So these trend lines can be seen anywhere and everywhere. As I said, all you need is 2 points, 1 and 2. It tested here and held. 1 and 2, 3, 4. So all you need is the 2 points to establish a trend, and from then onwards it will act. Next. But they can also fail. So go to next. Then you establish a new trend line basically. So previously it was here. Now we moved it to first point became this, the second point became this. See, this is the same one which we previously established. It's not broken until now. This is Friday candle basically. So I also wanted to provide you latest information, not just historical charts. So this is how currently look at the top one. This never broke, and this is August low. You all remember the yen carry trade. Market sold off 10 to 15%, and from then onwards, from August onwards, this trend line is acting as a resistance. So you can see this is tested multiple times. Even last week or the week before, it tested. It didn't test, but it went very close by, but it couldn't break that. So we should keep these things in mind. Next one. Okay, I quickly wanted to show an example for a trend channel. This is earlier this year from April to July onwards. We had a nice rally from 4900 to 56,000, almost 15% rally, and throughout this time, most of the time price reacted within this trend channel. For a trend channel, you need 3 points. In this case, I think it was this, and this basically. So for a single trend line, you just need 2 points. For a trend channel, you need 3 points. Whether it can be 2 points here and 1 point here, or it can be 2 points here and 1 point here. Okay, now we'll talk about the last support and resistance, which is the in moving averages, which is dynamic support and resistance. The previous ones which we saw, they, let's say the horizontal support and resistance, they stay at a level, they don't move. Whereas these ones are dynamic, so as the price keeps going up, they come in support. Let's go to the next one. Okay, this is S&P 500 last 6 months chart. Again same thing in July when it hit high of what is this 5650 or something, it consolidated sideways for almost 3 months, the whole Q3. In the same period we saw this yen carry trade sell off, but once it break out, then it started trending. So this is again going back to the market phases which I talked very early. So market goes from trend consolidation, so when a stock is consolidating, these moving averages are useless because they also move sideways, so it doesn't give you a signal. Only when a stock is trending, these are helpful. So that's why I wanted to separate. So now once a stock is trending for S&P 500, 20-day SMA acted as a very good support. 1, 2, 3. 3 times it acted as a support. When things are very bearish, even 20-day SMA can break and it will go to 50-day SMA. So this is October 2023. October 2023. I would say this is one of my best calls. Last October, things were very bearish because SPX dropped from 4600 to 4100. There was so much negative sentiment. Everyone was expecting SPX to go to 3800, 3600, but I said SPX is going to reverse from here. I said 4200. To make me a fool, it went down another 50 points or so, but within a week it went up. So and then started trending up. So from this bottom 4100, now we are at 6100, almost 2000 points, almost 50%. S&P 500 went up. That's why I'm very proud of this call. So look at this. Like once this reversal happened, it took a long time to test this 20-day SMA. So if your trade plan is to just only trade using 20 SMA, whenever it touches, I'm going to buy. You also need to be patient. You might not get so many chances to get in basically. But look at this, like it's supported throughout almost for 1000 points for a 20. Basically, it's a 25% move. This only 20-day SMA supported it. It never touched the 50-day SMA at all. So a simple tool like a simple moving average can keep you on the right side of the trade. Let's say you entered anywhere somewhere here, or let's say there is a technique called SMA crossover. 20-day SMA crossed 50-day SMA here, and let's say you bought it here. You could have still ride this whole wave, keeping your 20-day SMA as a stop loss. So yeah, trading can be simple. Many times we complicate it. We'll go next. Okay. Any questions? Break for questions. Yeah. Let's take 2 or 3 questions. Yeah.
So I was trying to understand why does we talked about many trend lines. What makes the pattern kind of fit in the trend line? So is it that the people's behavior about how they trade kind of normally gets into the distribution, or what makes it?
It's technical analysis. They call it self-fulfilling prophecy. So it's all about multiple people doing this. My own interpretation of this is these are easy to code. They say right, like 80% of the trade, 90% of the trades nowadays done by algorithms. Now to teach an algorithm to do something in an algorithm, you need some way to tell it. You can't sit there every day, every minute and trading, right? A trend line is an easy, right? Like you can fit a line and linear regression techniques. There are multiple techniques that can do. So my assumption is that. Yeah. So, again, I don't know. I don't have any insight, but that
Sure.
my mathematical mind says that that's probably. Okay. Yeah, good call.
So you're saying that 2 or 3 points that is kind of uptrend or downtrend. How can we define those points?
Again, in you can pick any two
Those
points
two
that are
points.
sticking out basically, or use the other technique of where from a point you saw a significant move downside. Yeah. For trend lines, I think you can take any 2 points that are sticking out basically. Let's start.
For identifying support and resistance level, do you see the weekly chart or like do you see the daily chart or is there any difference?
Yeah. So good question. I actually start from monthly. I start from monthly and then go to weekly, then go to daily. Yeah.
Maybe you'll be covering later. Just do this trend lines apply for options as well, like day traders? Like how do you?
So anything I'm teaching works from monthly chart to 5-minute, 1-minute chart. So you can find these patterns anywhere and everywhere. So your time frame is up to the for a day trader they might use 5 minutes, 15-minute chart, or even 1-minute chart. So they are universally applicable.
So principles are same.
Same.
And even algorithms work.
Yeah. Let's take one more question and then yeah.
The-
Okay, Rama. Specific.
No questions to Rama. No.
No. Rama always first.
I hear there is like demand and supply word a lot, right?
Yeah.
How do we connect those with the support resistance, or if it not handle this more?
They are same. So supply and demand is a concept people created only because people started treating support and resistance as lines. So they to separate lines from zones, they started creating supply zone and a demand zone. But there are some specific rules for supply and demand zones. It's little advanced, but again, if anyone interested, it's a very good topic to research and practice. There are automatic indicators in TradingView that can do. I think you use probably one of those indicators. I saw it in your
Yes,
chat.
something on those.
Yes.
So Praveen, like might be a basic question. What are the key metrics you consider for the technical analysis? Like technical analysis should be done by itself. So where can we look at that, and what are the key metrics we can consider for this analysis? Like MSI, or since last time.
Those all are indicators. I don't want to talk about indicators now. Please watch that session. Support resistance, trend lines, and those are manually drawn. SMS, you can easily add them. Then the indicators, I have RSI, MACD, squeeze. For each indicator that I put in my chart, there is a specific purpose I use it. Again, let me quickly cover it. Squeeze indicator tells me whether the stock is moving sideways or not. Okay, that I can also depict from the chart itself, but squeeze indicator explicitly tells me that. Okay, MACD indicator tells me when a momentum shift happens from down to up or negative to positive. The last one, RSI, I use it more for divergences. RSI, people use it for overbought and oversold. I don't use, that's the wrong way of using RSI. I use it for divergences. Yeah. Okay, let's go to next.
Praveen, last question. For trend lines, what's the duration you keep to start a trend line? So
Forever. I mean, these things like support, these things, they'll stay. Again, sorry. I'll keep it until the stock is respecting it. That in SPX chart we saw there was a green line. Once the stock went below that, that trend line is no more valid. So I'll remove it and I'll move it to the next significant point on the chart.
so you take 6 months of time or?
No, there's nothing like that.
Nothing like that. Okay.
If I'm in a 15-minute chart, the trend line might only follow the
Got it.
same day or
Got it.
maybe couple of days max.
So it's based on what chart you are taking.
Exactly.
Okay.
That's why I said these patterns are universal. You can draw support and resistance even on 50-minute chart, which will be minute levels. But my go-to chart is always daily. I go to weekly and monthly for bigger picture, for me to get an idea. Okay, what stage this stock is. Okay, this is very important topic. This is the first time I'm talking to the this community. I want everyone to pay attention. So let's go. So okay, now that you did some technical analysis, you have an idea. Maybe you think that it's a highly probable idea. This is going to work. Now, how do we put it and how do we execute it? If you can't execute, if theoretically learning all these techniques is useless, right? At the end of the day, we all here to earn money. And of course, Ravi Garu will tell us how to save taxes on our earnings. But let's first learn about earning the money, then we'll listen to Ravi Garu on how to save taxes. Okay, so this is my skeleton for a trade plan. And next time, I want to encourage everyone who is taking a trade. I want them to think about all of this. First and foremost, why am I taking this trade? So definitely I did some technical analysis, like maybe you could have used support and resistance or a trend line or a moving average, or you have this awesome custom indicator that gave you a buy signal. Great. Or someone else in the stock group suggested, I'll say this is the wrong reason to do this. Don't ever listen to me, Rama, Balu, or anyone. You have to make up your own mind. You need to, because suddenly we can say that, hey, I'm busy with work. I might alert the trade when I take in, but when I exit, I might not alert. So you think that, hey, Praveen is still holding, so I'll also hold. That's never a strategy. So okay, now what kind of trade types? Again, I'm keeping it simple. I'm going to talk about only from a stocks point of view. We'll touch about options. In stocks, you can do buy or you can sell as a starting trade. Again, even sell, I don't think many habituated to do that, mostly buy. Now, in a trade plan, these three are very, 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 very important for me. What is my entry? What is my stop loss? What is my exit? Because this tells me whether this is a worthy trade or not. Most important thing for me is stop loss. I don't even worry about exit. Why stop loss is I want to know first when I will be wrong, because that is exactly defines my risk. If I don't know my risk, it is like jumping into a well without knowing the depth. So yeah, next. So now I want to use the technical analysis we talked about to create some trade plans, and let's go through them. Okay. So can you go next? Okay, let's go back. Yeah. So I want to use the snow examples which I shared earlier because it gave us a nice opportunity to enter, right? So why I am entering, so let's say I want to buy snow stock, okay? Why I am entering? Because I told you it's at support zone or at all-time lows. When I shared the alert, it was 113. It was trading at 113, okay? Now what kind of trade type? It's a bullish because I want the stock to go up. Now what is my entry? Near the support. Support is 107. So any place somewhere near that. And what is my stop loss? That's the most important thing. So once it breaks 107, that's the all-time low. I know that okay, this is not working. Maybe it wants to go down to 100, 90, 80. I don't know. So I want to get out immediately once it goes below support. And exit is my next resistance. Now let's put numbers to this. Okay, so whenever I put a message like this, I try to provide all this information, although I don't know how many people read and care about it, but because it's for my sake, I do that. So other than the support and resistance, I also gave bunch of reasons here. Why? Because in this case, right, stock failed to close above my indicator. That I'm talking about why it was not going up. In second, I was telling that while the stock was going down, RSI was flat. So this is the divergence which I was explaining a bit. So if stock is going down, RSI should also go down, but in this case, RSI was going sideways. And MACD, he was trying to turn up. So this was like I'm pre-anticipating a move. So it was not kind of ready. Next, what I said is, yeah, I gave a rough trade plan here. What I said is buy here, which is at 113, with a stop loss below 107. That's one way to trade it. Or wait for the stock to go up 120. That's where my indicator resistance was, because that acted as resistance. Either you can do that. So if you're an aggressive player, hey, let me take a chance. Maybe it might go upside. Or if you're a conservative, you can wait till 120. So that was my rough trade planning. Okay. So yeah, I think this is somewhere around. If you didn't know about that, now that Snow is trading at 170, 180, but on the day, if I would have created a plan, this is how it would look. Where let's say it was trading at 113. Let's assume this indicates the current price. Let's assume 113, and this 8A all-time low was 107. I think it's from this point and this point. So my entry will be at the current price 113, and my stop loss will be 107. My first target will be the next resistance zone, which is 132 to 136. The second target and the third target. This is all came from the technical analysis we talked about. Why I picked that? Because once price touched here, it made a significant move. Once price touched here, significant move. Once price touched here, significant move. So simple. Let's go next. Okay, this is what I told. Buy stock at 113, stop loss 107, next target 132. If it goes above, great, but at least we know. Before entering the trade, I have a clear idea. When do I know that I am wrong, and what is my next target? Okay, now let's talk about the risk reward. This is most important. If I enter at 113, my stop loss is 107. The amount I'm losing is 6 per stock. But my potential profit is 132 is my first target, 113 is my purchase price, so $19. So there is a 3x risk reward. Great trade. Like 3x is great outcome for any trade. So this is a valid trade. So why risk reward calculation is important? So think about this. In a year, you might be taking hundreds of trades. Everyone has their own success and failure ratio. In my case, I think only 25% of my trades are successful, 75% failure. Yeah, from my messages you wouldn't believe that, but that's what it is. I do much more than what I post in the group. But because the risk reward in my that 25 is so good that my years are always end up being positive or very positive, because always I go for low risk, high reward kind of trades. So I always try to buy at a support level, because immediately I will know within a day, within a week, within a month, I know that I'm wrong and I will get out. But if I'm right, the trade can go for months or weeks, etc. So that's why having this idea in mind is very, very important. Next. Now let's talk about a couple of trade management. Okay, now let's think in the future. Let's assume that Snow is now trading at 132. So my first target is set. Now what I'm going to do, right? So again, there is no single answer that suits everyone. So I'm going to give you a few options. 3x profit is great. Get out, move on, look for a better trade. Yeah, done. Like your trade is successful. Why to complicate stuff? Or move stop loss to the price you bought. That way, worst case, you're break even. You have nothing to lose. So previously our stop loss was 107. Now we moved to 113. We are break even at least, right? So or trail the stop loss. The trailing stop loss is a technique which many brokers have. Stupid brokers like Robinhood doesn't have, but many Fidelity, Thinkorswim, all good brokers have. So you can say that, hey, from 113 it reached 132. I'm okay to lose 5 points. Okay, I'll put the trailing stop loss as 5 points. Now what happens is, let's say stock goes to 140, your stop loss will move to 140 minus 5, which is 135. As the stocks keep going up, your stop loss also keeps going up. So minimum you are guaranteed is 132 minus 5, 127. So at least 14 points you are guaranteed on the trade, right? But anything on top of that is cherry on top of the cake.
Robinhood has this bit.
Oh, is it?
Yeah, Robinhood.
Okay, thank you. Thank you for educating. So that's about trading stop loss. This is my many times I do for special short-term trades is I'll always book half position. At least I have some profit, and then I'll move the stop loss to my purchase price so that I have taken out some money from the market and I'm still in the game with half position. The last one is move stop loss to the next higher low. So let's assume that, see, stocks never go up in a straight line fashion. Let's say from 113 it went up to 130, then it came down 124 and moved to 132. I can move my stop loss to 132 because this is my next support basically. Previously this support didn't exist in my chart. Now because the stock made this move, now I got a new support. So I can move my stop loss from 107 to 124 and I can keep doing this. So again, these are some exit ideas. You can keep, you can mix and match. You can do whatever, however you want. So these are just some ideas. Okay, again, I'm just, this is just another scenario I want to play out. So let's say snow trading well above 132 to 140. So let's say some news happened and it gapped up, and went up to 140. Again, you can use the same techniques that I mentioned in the previous one, but I just want to introduce a couple of them. Again, 140 is better than 132, exit. Move stop loss slightly below 132. Again, because this was resistance, now the stock is above, it becomes support. So now it's your new support. So you can put it as 131 or 130 as your stop loss and still be in the game. If you have extra money, you can buy when it tested 132. So this is called pyramiding. So on one side we were talking about how to exit, but on the other side, why should I look for a new idea? Hey, it looks like there is a good momentum in snow. Why not I continue with this? I'll keep adding whenever it tests a new support and whenever it creates a new support, and I keep adding to the position. Again, if you, let's say you add it at 132, you put your stop loss at 130, you're losing only 2 points on the trade. But if, let's say, if it keeps going up, you're compounding your gains basically. So pyramiding is a very strong technique. Go Google it and practice it. You can keep doing these things for each and every trade basically. So again, I covered all of this because we always think about entry. We don't plan for our exit. So it's very, 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 very important for us to plan how we are going to trade based on the stock reaction. Next. Okay, yeah, I'm making it sound very easy, right? So yeah, trading can be easy, trading can be complex. Many times it's our psychology which we make it complex. So that's why I say if you master your trading psychology, trading can be easy. I can tell you my personal experience. In my first couple of years, I spent $10,000 to $15,000 on indicators. I was searching for a holy grail. I could never find, because every indicator has its own flaws. So, and every guru has a flaws. I have flaws. Probably Rama is exception. So.
I have so many flaws. Please, everyone say.
So, thanks, Rama. So, anyone and everyone we follow, every indicator, everything has a flaw. So, if we keep our techniques simple and repeatable, and in the end, we'll get to a method that will work for us. Again, something that works for me might not work for you, but what matters to you is you need to identify something that works for you. Okay, next. Okay, yeah, let's talk about another case, right? What happens, you have all these awesome plans, everything, but there was some bad news or earnings or something, snow suddenly went below 107, all your risk reward, everything gone for a toss. So we should also think about those scenarios. When we enter, we always dream that it will open up 100 points higher. But we should also think about the case when what happens to the other side. So. Okay, yeah. So put options is one way you can protect yourself. Stop loss is one way, but buying put options is another way. But we're going to cover options in few minutes, so that's why Ruko Zara. Okay, I want to just cover the latest one. This is the last week. My alert, SOU1, SON. Again, I just want to take a minute to appreciate that contest that we started. Again, thanks to our President Garu for the idea. I'm glad we started because one, we discovered a lot of new stocks. I never knew about SON or INQ or other stocks before, but now everyone in the group knows about them. Many people traded, many people bought. We had some good discussions about that. But when the stocks keeps going up like 50%, 100%, you get FOMO, right? So SON I played a lot, but INQ I didn't play until now. But what I would do is like always go back to my indicators. So in this case again, it was my custom indicator. So I told that like, hey, when it was somewhere here, I said that, hey, this looks overbought to me. It's going to sell off. Again, luckily it happened. This is a resistance level, came from FIPS. FIPS I didn't cover, but again, FIPS are very important tool that I use. You will see a lot of FIPS in my chart. So this is another support and resistance technique that you can learn. It was hitting this 1.68 level. That's why I felt like it was very far away from my indicator. For those two reasons, I thought it's overbought and it sold off 20% and it came to my bands. I thought, okay, as long as it's above this red band, it's bullish for me. So that's what I alerted. Can you go next? So I bought it around. Yeah, I bought it around 13.55. On Friday, it moved up 25%. So my trade is already 25% profit. Again, what I'm trying to say is, I didn't expect that Friday it's going to make such a move. My job was to be there at the right place at the right time. I did that by purchasing at 13.5. It happened. This move could have taken 2 weeks or 1 day. That part I don't know. My job was to be there at 13.55 and I put a stop loss immediately. In my trade, if I buy, immediately I'll go and put my stop loss. For me, always, I need to protect my downside. Upside, market will take care of it. I don't have to worry about it. So that's what I did. Again, trading is not that easy. So any Baba holder, any Zoom holder, or any TDOC holder, yeah, exactly. They'll be saying that, man, you are making it look so easy. So why are you fooling me? Again, I'm not saying it's easy, but can you go next? You need to have a plan. Many times people lose because you don't have a plan. You think that I buy and I hope that this is going to work. So hope is not a plan. You need to have a trade plan. You need to know your entry. You need to have your stop loss. You need to know your exit. Again, your entry could be some fundamental reason, right? Some news happened, a stock entering into a new market. That's why it's going up. Great. But keep monitoring that whenever that is not working out, when you learn that that story is not true or anything, exit. Don't be emotional. Don't get emotionally attached to stock. I was looking at, okay, if I can time travel and go to 2020 and Zoom holder, what I would have told them? I would have told them like, hey, look at this, like this keep holding this 50-day SMA for almost a year. Maybe just use that as your dynamic support and resistance. You might not have exited at the top at 575, but let's say you bought anywhere here, if you have exited here, that's still a profit, right? So, yeah, trading can be easy if you have a plan. You need to know why you are entering. You need to know if you know when to exit. It can be easy. So, next. So homework. So go back, open your bags, identify all those stocks that you're holding for last 2-3 years. They are in losses. What you could have done differently in the past, right? Go. I know it feels painful to go look at those stocks and look at those charts, but that's how we all learn, right? So we need to accept whatever wrong happened and move on, but be a better me next day. So go do some homework, try support and resistance or other techniques, figure out what you could have done differently if you are holding any of those stocks. Is TA really that useful? Is technical analysis really that useful? Just figure out. Yeah, maybe you might find something. You might learn a new technique. Yeah. Okay, I just want to summarize. A trade plan should have a strong reason why you are entering. You need to know whether you are buying or selling, and these three are paramount: entry, stop loss, and exit. So from now on, anyone who is saying I'm buying a stock or I'm entering an option, please ask these questions. What's your entry? What's your stop loss? What's your exit? You can ask me also. If I'm not sharing, I will try to share.
No more messages in the stock.
Exactly.
I think whoever is sharing the alerts are mostly probably handled.
Yeah.
For example, when I speak to Rama, when I speak to Rohan, I very clearly hear from them what is the exit plan. So at least as of now, I don't see many people posting. It's a good reminder that we are going to have.
Yeah.
What's your
So
target?
have a plan for yourself, but if you're following someone, definitely ask these 3 questions.
Okay, so when I share the screenshot. This side you have numbers, there are bars, so you have all the information. Please do not.
Let's be explicit, Rama. Let's people will assume why to leave it for interpretation. Okay, questions.
So what are some tools to discover the trade ideas? I mean, I'm guessing there must be some tools to sort of make this process easier, right?
Yeah, so for me it's based on the technical analysis, right? For support and resistance, I always put alerts. In TradingView, you can put an alert at a level saying that if it cross below or cross above, it will immediately send me an alert. So that's one way. Similarly, trend lines also. So drawing the support and resistance and the trend lines is a manual effort for me. I like doing that, I do that. But whenever I draw that, I immediately put an alert saying that whenever, even for a trend line, when the stock crosses above that, it will send me an alert, crosses below, send me an alert. Even for SMAs, 20-day SMA, 50-day SMA, I can create an alert or do that. For SMAs, there are screeners also. Any stock that touched 20-day SMA in the last, like yesterday, go through all S&P 500 stocks and tell me whichever stocks touched in the last 1 day, last 3 days, 5 days. There are a lot of screeners because these indicators are very common, so you can find them easily.
So, what about the long-term stock? Like, suppose Meta is a good example. It went from all the way down to 100. Some people were holding, they are never paid about anything.
Yeah.
They are still profitable.
Yeah.
The people who just hold them, like, is this, what kind of
Open your
techniques we
door.
should use for that kind of, long-term analysis, for the same things, even for long-term?
Again, I'll say, what was the reason? I'll go back to the trading plan. Every time now anyone asks me, I'll say that. What was the reason you bought Meta? And why, when it was going down, did that story change? Let's say, you say that, hey, Meta was the #1 social network and ad revenue, that's why I bought in. Okay, now they're entering into this metaverse. I don't agree with that plan, I'm getting out. Or you can say that, okay, other way to think about it is, hey, Apple has all the phones, Google has all the browsers, Meta doesn't have anything. Maybe the metaverse is the thing that their surface. So even though market doesn't believe in that, I believe in Meta and I'm holding that. It has to be one of those.
But it face all the indicators, right? All the trade.
No, again, indicator is one way to enter and exit a trade, but it's not the only way, right? So your reason could be anything. It could be fundamental also. You again, I don't know about the fundamental metrics. They have a PE ratio, earnings per share. Like there are many metrics such that you should be able to do the same thing on that also. Anytime EPS drops down by some percentage, I'm going to get out. Yeah, you can. All the techniques I'm teaching are generalizable. Nothing specific to one specific stock or anything.
So all the graphs that you have shown, like everything goes up, down, like, but if you look at it long term, it's going up and down, but it goes, the slope is always positive.
Yes. Not always, because so
It depends on the consumer. So if I buy at like, let's say a midpoint and I leave for like next 4 years, like, and then, like, assuming okay, Meta was probably a edge case where it went down and it came back, but let's say at the end of the 4th year I'm still profitable. Is that a good way to think, or like I should like exit?
So all I'm talking about is trading, okay? What you're talking about is investing. So you can use some of the techniques to enter into an investment as an entry point. In an investment, there is no exit, or at least I'm not an investor, so I don't know. The exit points.
We will cover the long-term investment in separate topic. We'll actually generation.
When a lot of you like keep sharing trade plans about like option autos or right, whatever, right? So one fundamental question I have is like how do you manage like your portfolio? Like you segregate like
I'm going to talk about that.
So
There is a
are you
slide for
having a
that.
separate core position, right? Trading position.
I'm going to talk about that.
I have 2 questions.
I'm going to take only 2 more questions, or you and that person. And
So what are the top 3 tools that you recommend? Second, when you do this technical analysis, do you use multiple of those for a given stock, or you have like go-to place? Like trade
yeah.
review.
So as I said, I tried probably hundreds of indicators. Okay, it doesn't help to have 10 indicators on your chart. You need to keep practicing. Let's say I started with probably 10 or 12. Then I started removing stuff instead of adding. In the past, I used to keep adding. Okay, let me add this. Let me add that. You start removing stuff which is not being useful to you, and also you need to figure out if 2 indicators are there to give you same thing. Let's say 2 momentum indicators are there. They always say the same thing. Why do you need to pick one of them and do it? So that's why you see 3 indicators below my every chart, and 3 are serving different purpose. One is telling me if the stock is going. The other one is telling me, when it's telling me, no other indicator is telling me that. So if it can do that only, then only I'm going to keep it. Otherwise, I'm going to remove. You need to be ruthless with these things.
No, top 3 tools that you recommend.
You need to discover yourself. I'll tell you that, okay, those 3 which I'm showing in my charts, those are my own.
No, he's asking.
No, I was asking about the tools, like trading review.
Oh yeah. Oh, okay.
Thinkers
Sorry.
one of the industry best tool.
Thinkers.
Yeah.
Yeah,
So
that's what I-
yeah, for charting, I use TradingView because I can use it on the browser. Once I joined Google, they didn't allow me to install Thinkorswim. So Thinkorswim is a great platform. Problem is, companies, it's a desktop app. They have a web app, but it's not great. So I had to forcefully switch to TradingView, but it's great. Only thing is it's paid. Even the free version, they'll allow you to up to use 3 or 5 indicators. So I think you can always start with a free version. And
Thank you.
no, last question.
I think you briefly covered in your presentation. We might have X number of stocks under our radar to closely follow the patterns. How do we break our bubble and start looking at something beyond the stocks that are under our radar? As you rightly mentioned, sound was never into your radar unless someone picked and showed you some of the trends, and then you looked at it and saw that that's a great trends where you can start looking into it.
So my way of doing that is I'm on Twitter. I follow hundreds of profiles again over the years. So in Twitter, the FinTwit or Finex, like however you call it nowadays, it's very popular. I mean, there are a lot of traders. The other is TradingView has their own Twitter account. There is one more Trading Spider, or there is one more company, Trade Spider. So if you go to these chart companies or the tool companies, they themselves publish their charts because they want to attract more people, right? So that's another way you can do that. Yeah, it's basically I organically discord many people I follow.
And does this apply for crypto as well, or the trade plans? Does this does this apply for crypto as well?
Guys, I think we have to meet the timeline, so when he says last question, let's respect him and then.
Yeah, let's move on. Yeah.
We have like a lot to cover, guys.
Yeah. Let me, I want to cover a little bit of risk management.
Little time thing, it's 4 o'clock.
Okay, 4 o'clock.
Yeah.
Okay, I have a lot.
Sorry, but
Okay, yeah.
but no restrictions, whatever you plan, please go ahead. I think people will take it as a treat.
Okay. Okay, few risk management tips I want to provide. Again, I have only 3 or 4 slides. Sorry, only 2 slides I think. But risk management also comes from your trade plan, which I told you. You need to discover what kind of risk reward ratio works for you. Because my success ratio is very low, my risk reward needs to be very high. Otherwise, the expected value will be bad. So you need to identify what is your own risk reward. But few tips I wanted to tell you. Always understand the market trend and bet in the direction of the market trend. If SPX is going up, means the 500 stocks that represent America is going up, you don't want to bet on the shorting, right? Because it might happen, it might work for 2-3 days, but your best bet is in the direction of the market. Think about loss before profits, which I again stop loss. Always think about when you will be wrong before how much I am going to gain. So market will take care of giving you gains. Your job is to protect your risk. Evaluate all potential outcomes. Again, as I said, we always think about, hey, 132 snow, 140, 180. Think about what happens below 107. That's the first thing for you to take care of. Never lose sleep over a position. Again, everyone came to US for a job. That's your primary. Trading is a secondary income. Never take a position so big that you are unable to sleep. It's not worth it. It's not worth it. So never take. Again, I am against leverage. I really take leverage. If your technique is good enough, right, you don't need leverage. You will get wins. Be very strict about cutting losses. Again, Zoom, T-Doc. You need to have a plan. Stick to it. Be ruthless. You can always find great opportunities. Being on cash is a position in itself. There is nothing wrong. Yeah, I already covered that. Scale into a position. So again, I'll show an example. Even for options, I don't buy everything at a time. Let's say even for snow stock, right? It went sideways for almost a month. You had so much opportunity to get in, right? Things moved only after earnings. So maybe you, if your position is 100 stocks, today buy only 25. Wait for a week, buy another 25. Or let the stock prove to you that it's not going down. Let the stock prove to you that it can go up, and then add more. Let your winners run. This is very hard for me too. Once I start seeing profits, okay, then can fix it.
Lock the profits.
So, but again, for me this is very important because my success ratio is low. So I need my winners to run very well that I can cover for my losses easily.
Praveen, sorry. Let your winners run under.
how to choose which would be the winner? I know it's pretty hard.
No, you don't know. That's why I said you take 10 trades. Market will tell you, your stop loss will tell you where you are right. It's not again whether it's not about you're right or you're wrong. It's about whether the stock has the capacity to run or not. So your job is to find out what is the lowest risk trade I can take. Take 10 of them. Maybe only 3 will succeed, but the 3 should outweigh the losses of the same.
So risk reward you want to be more.
Okay, guys.
Again,
Questions వదిలేద్దాము. Let him run through.
Yeah. I have a lot of slides to cover. I'm not going to give any questions break. Maybe at the end we'll cover everything. Don't always try to get the best price possible or best profit possible. There is nothing called best profit. They say right, meet in the middle. Forget about the buns. I'll say vada pav the pav in the middle. Forget about the vada in the middle. Forget about the pav. So try to get that 70-80% profit. Don't worry about like I want the max profit. But especially this is true for options. Stocks it's still manageable, but in options. Even if a stock moves sideways, you didn't do anything wrong, the premium will go down. So don't try. Price drives the narrative. Extreme sentiment in itself is a good signal. What happens is again the meta example, right? As it was, you will observe that as the stocks keeps going down, they keep pumping negative news. As the stock keeps going up, they keep pumping positive news. It's like there is no other stock in the world, right? So INQ. I don't think quantum, yes, there were some significant moves happened, but it's not at a stage that where Nvidia is at. While quantum stocks are running, make the best out of it, get out. Okay. This is my thinking. Everyone might have their own way of thinking. You asked a question about how many stocks or how much I should put. When you are trading stocks, you can have number of position, but no position should be more than 10 to 20%. You know that hedge funds like Kathy RK, right? They have a rule that nothing more than 10%. They cannot have a position more than 10%. Anytime that happens, she cuts it. So
I think all the hedge funds do.
Yeah, I'm just giving that as an example. Everyone knows that. Again, try not to have more than 10 to 20% in one position. I'll also say, try not to have more than 10 to 20 stocks. I mean, it will be hard for you to track them. But again, it's up to you. You need to discover what is that sweet spot. Again, risk reward I already covered. I'm not going to talk options. We didn't talk a lot about options, but again, in options, the failure is higher, so you need to have risk very less. In one trade, I'll say 2 to 5%. So if your LOTOs short term, less than 1% of your portfolio. If you have 100K account, never put more than $1,000. Again, when I say risk here is, let's say, you might buy a $2,000 position, but with a 50% stop loss, it comes down to 1,000. So that is what I'm talking about. Let's say you can buy a $5,000 position, but your stop loss is $4,000. When it goes below 4,000, you want to exit it. So your risk is 1,000. So that's what I want you to limit to this. If you are trading in weeks, you're taking a position with, let's say, next week or next monthly expiry, which is happening 3 to 4 days, don't risk more than 2%. If you're taking a trade that is expiring in 3 months to 6 months, then you can think about more than 2%. This is my way of, this is how I do it. You might have to find your own way of it. I'm just providing this as a guidance because this discussion came up in our stocks group. Okay. Finishing the trade plan, this is the last chapter in that, which is resistance. We talked about the support, right? When it's support, you buy, you put the stop loss below the support. When you are at a resistance, you want to short the stock, right? With the hope that it will go down to your next support and you make profit out of it. So where do you enter? you enter right at the resistance. Your stop loss is above resistance. Once a stock breaks above the resistance, you know that it's your stop. It should be your stop loss, and exit is the support zone below it. It's the opposite of the buy. Here we sell. Simply. Yeah, this is the snow example we talked about. Let's say first day you discovered here that okay, snow is unable to break above that. You saw it for 3 days. It's happening. I think 3 times it tried. Okay, maybe worth taking a. So let's say if you shorted here, your stop loss will be here. So if you shorted it, let's say this is 185, your stop loss is 195 or something. So 10 is your stop loss. The next target is, let's assume, I think I have numbers. Can you?
Yeah, actually in general, shorting is like very advanced, not recommended.
Yeah.
Better take put position there.
Yeah. So I'll say entry 186, stop loss is 196, your exit is 166. Can you go to the next one? Yeah, your potential loss is 10, your potential profit is 20, so 2x risk reward. If it fits into your risk reward criteria, go for the trade, otherwise let's. Okay, I'll take 1-2 questions and then we'll move on.
How do you think about taxes when you're making your decisions? Do you think about any of the
Let's earn money, then we'll talk about taxes.
Separate section on that.
Yeah. You know, Ravi Garu will tell us next.
Short term versus long term.
See, tax is a side effect of it. You should never make your trading decision based on the tax. Let's assume that you're waiting for the new year to happen so that you don't pay taxes. What happens on the last day of the year? Stock tanks 20%. Never take your trading decisions for the sake of taxes. Last question. Anyone?
You,
Sir,
you diversify industries only specific people concentrate.
No, I'm very bad at it. I'll admit it. My style is momentum stocks. Any stock that's in momentum. I don't care about the industry. I traded UNH, which is healthcare. I traded JPM GS, which is finance. So, in a way, yes, I diversify, but not explicitly. I don't look for diversification. But if that sector is moving, bunch of stocks in that sector is moving, you can assume that I have 1 or 2 trades going in that sector. Okay, so options, again, I'm not going to cover deep. I want to introduce few techniques, but I definitely want to give little bit of idea so that anyone who was lazy to not watch my previous session after reminding 10 times for them. Again, there is this movie called Dumb Money, which is about GME, GameStop trader. If you haven't watched it, must watch. Please go and watch. I think it's available on Netflix or some other. Yeah. The reason is this. So this guy, he bought GME 12 strike calls for I think 20 cents. Yeah, I think his price paid is 20 cents. So he bought 10,000 worth of contracts, or maybe something 10 or 20,000 worth of contracts. They grew to 19 million.
25 million profit.
Yeah.
40 million gain.
Exactly. So options are very powerful in that way. It can make your life. Go to the next slide. It can break your life. So options is double-edged sword. Again, this is little bit of options and also stupidity of Robinhood. That's why, although I trade in Robinhood, I don't like it as they made it look so bad that an amateur trader suicide, because he was assigned an option which he sold. The amount he owed was 730K, but again, they wouldn't. First of all, they shouldn't have allowed him to take so much risk. It's a broker mistake. But in any case, so if you don't know what you are doing with options, it can screw your life. So please understand. Paper trade before you're very, very comfortable. Paper trade for a couple of months, or you can just live without options. You can, all the techniques I shared, you can apply in stocks and you can still do well. Options is one way to do it, but not the only way to do it. Yeah. Okay, for all the people who are risky, aggressive, so here are some options basics. So, okay, I do 90% of my trading in options. So, but I know the risk. I am comfortable with that risk. I only play on the buying side. I rarely doing on the selling side. But that's me. So, call option is basically you are betting that the stock will move up in that direction. So you pay little bit of premium to buy a call option. If the stock moves above the strike that you are purchasing, you will be in profit. Similarly, put option is, again, we talked about how do we protect the snow when it goes to below 107. Immediately when you buy the stock at 113, let's say you bought 100 stocks. So an option is equivalent to 100 stocks. So minimum 100 stocks you need. For buying, you don't need any stock. You can have 0 stocks and you can still buy. For selling, you might need. I don't want to cover selling because it's risky. I don't want to give wrong ideas to people. So there is only one case I'm going to cover selling. So yeah, in put option gives you protection. Let's say I buy snow stock at 113 and buy an option expiring in 2 months, 3 months. I pay some premium. It's like an insurance. I pay some insurance that let's say I paid for one option. I might have to pay, let's say, $1,000. Again, I'm putting some random number here. I don't know the exact number, but it protects me whether snow goes to 90s, 80, or even 0. It protects me that until that expiry is there, I can sell snow stock at 113 because I paid this insurance. Like any insurance, you can buy a put option and protect your downside basically. So, good. Yeah, I'm trying to explain the same thing. So, let's say you bought an option for this random stock at 120 strike, and 30 days from now it's expiring. If the stock is trading at 135, let's say you bought this option at $6 or something. Now the difference between that is $15. So 15 minus the 6 premium paid, the $9 is your profit. So you're participating in the upside of the stock. Instead of paying 120 into 100, 12,000. Instead of paying $12,000, you are just paying 6,600, but you are purchasing in the participating in the upside of the stock through a call option. Put option I already explained. So let's say I have the option to sell the stock at 120 if I buy put. Whether the stock is at 100, 80 or 0, it doesn't matter. But that is only in the next 30 days. Once the option is expired, I no more have the option to do that. Okay, yeah, strike price is the 120 in the previous example, expiration is the 30 days. So any option, there are 3 important things: whether you are buying a call or put, and the strike price and the expiration date. No questions, please. Okay, let's go to strategies. Again, with stocks you can do buy or sell, but with options you have a lot of options.
That's why it's called option.
Yeah, so you can do buy a call, you can buy a put, you can do a call spread, you can put. There are a lot of options. We were not going to go through. I'm going to dive deep into 3 different ones. Again, when do you do buy option? Even when you are doing options, you need to have this trade plan in your mind. Without trade plan, don't enter. Like Abhimanyu, right? He knows how to get in, he don't know how to get out. So it's a similar thing here. Before buying an option, you need to have a plan around when to exit, and you need to have a clarity on the direction. And with option, you need to have a clarity on the time frame. Why? Because if you buy an option, it is going to expire at a certain point of time. With stocks, there is if snow can move sideways above 107 for an year, you are still in that. What you are losing there is opportunity cost. This one, whatever let's say 100 stocks, 11,300, right? You would have put it in another stock, it might have gone up, but there is no downside. You are not losing anything. Yeah. But with options, you are going to lose the premium that you paid. It's like insurance. Use it or lose it. you take a term plan, you think that you never want to use it, right? So it's a same thing here. Again, time frame. So there is 0 DT, which is same day expiry. There is a weekly expiry, monthly, and for SPX we have options expiring up to 2027. We are in 2025, but other stocks may be 2026. So what I'll say is, if you are taking a trade based on an hourly chart, maybe you should consider 0 to 1 DT, because if you got a buy signal in hourly chart, it might last for 6 to 8 hours. So you should consider short-term expiry. If you are taking a trade based on daily chart, maybe 1 to 4 weeks expiry. If you are taking a trade based on weekly, then we are talking about multi-month trend basically. Yeah. Next. This is a time decay. Again, I'll briefly cover it. You should Google more about it. So, because options in nature, there is a time aspect to it in the premium. So, if your option, which means let's say you bought an option which is expiring in 4 months at $600. Let's say the stock moves sideways for a month. So at the end of 90 days, you will still lose value. The 600 might go down to 550. But in a stock, if it moves sideways, you are not losing anything. In options, you will lose the theta. But this decay is severe as the time goes down. So if I bought option at 600 premium here, and stock moved sideways for 4 months, by the end of the 4 months, your premium is 0. So stock is still there, but the option value goes down. So you need to be mindful of that.
Exit criteria is very important.
Yeah. Okay, I'm going to cover these directional strategies: buying call option and buying call debit spread. Puts I'm not going to cover today. Okay, again another example I'm going to share here. Okay, this is August. I don't know, it's coming in Indian format for some reason, but in August I posted saying that when August is the time we had yen trade issue and the stock market was down, but PLTR was the stock that was showing a lot of strength. In times of uncertainty, stay with your strong guys. This is also taught in management. Always care about your strong performers in your team. So why? Because it's showing strength means someone in the market is interested. Some big guy is interested and they want to pump up the stock. So this is a rough plan I gave. I'm bullish on this stock, and the target is 8H, which is 45, and good to buy around this range is what so entry target. I didn't talk about exit, so according to the new rules, this is wrong. but let's say below 25, let's assume that the trade idea is invalid. Next. So yeah, why did I say 45 is the target? 45 was the all-time highs, so the stock was doing well here. So my next logical target, I couldn't find anything strong, so I was hoping that it will go, because the strength it was showing. I was hoping that it will hit 45. Okay, so what is the trade plan? Again, going back to the basics. In this case, I am buying call options, not buying the stock, because we are talking about options. Call option, without buying the stock, I want to participate in the upside of the stock. Entry around 30. Stop loss is if the stock trades below 30. I am going to exit. So now you can ask me, hey, like I'm buying options, how am I going to put a stop loss on the stock price? So again, platforms like Thinkorswim, they have conditional orders. In conditional order, you can say that if the stock price goes down below this number, execute sell order. So Robinhood, I don't think I have. Otherwise, you keep monitoring daily or put an alert. Whenever it goes below 24, go and sell your option.
They have stock market. They have it.
Oh, okay. Exit is again 45. When it reaches 45, I'm going to exit. Similarly, you can put a conditional order saying that when it reaches 45, sell my option.
How does the time come into this picture here? Because trends?
Yeah, good question. Next, I think I talked about that. Okay, I will come to that in a minute. So, what I did at the time was this. Basically, I bought this. I alerted it in 6th August. I bought March 2025 calls. Why? The whole market was down at the time. I didn't know how long it is going to go up. So I wanted to buy time. So the longer I have time I have in the trade, the success of that is going to determine. So it's almost 9 months or 8 to 9 months down the line. I bought. I also scaled into the position. First I bought 50%. Let's say I wanted to buy 10 options. First I bought 5 of them. A month later I bought another 2, and a month, almost 2-3 weeks later, I bought 3. So the blue arrows here is when I entered those trades. When did I exit? I exited at when it hit 8H45. I exited 50% of my position. Ideally, I should have exited the whole position because that was my trading plan. I'll tell you why I did that. And in November, it hit stop loss when it was around 65. I exited the full position because of my stop loss. So, okay, I try to answer some of those questions. Now you can say like, why did I scale and why did I average my calls? I averaged up, not down. So first I bought for 5. Second time I bought for 6.5. Third time I bought for 5.9. So generally in options, it is discouraged to average down. You bought at 5, it went down to 2. Don't average. That's what market teaches us. But in my case, yeah, in my case, I averaged up, not down. Why did I'll show you that this option price actually went down to 2, but I still stuck to that because it never gave me sell in my indicator. So in your case, again, if it option, as I said, when the stock price goes sideways, option price might go down, but as long as it is above your stop loss, maybe it's worth holding that basically. Why March 2025? That's the question you asked, because stock moves sideways for a quarter. So it moved between 20 and 30 for a quarter. So I just extrapolated. Okay, next it moved from 30 to 40 in Q4, 40 to 50 in Q1. So I went conservative and I bought much. So that's how I did time. You need to figure out how you want to do. So again, yeah, I thought it might take long time to hit all-time highs. Again, why did you sell so early when there were 5 months, right? Because the option is going to expire in May. But why did I sell? I stuck to my plan. My trade plan was exit at 80H. So I stuck to the plan, but I did only 50% because the reason 5 months were there. So I took my money out from the trade, and I was still participating in the upside. Then I kept raising the stop loss. So my exit happened. The second exit happened because of a stop loss hit. But still, I made 400% profit. I'm happy. Can you go next? Now you can see the price is 45.77. I bought it at 6, so it's 750%. So, but again, this is where the psychology comes into the mind. You need to make peace with it. You stuck to your plan. You executed well. It's a win. Move on. Don't worry about the stock option can go to 45, 50, or even 100. Yeah. And after I purchased, it even went down to 2. But I stuck to my plan. I held it, and finally it went to.
Could you have pyramided during that time?
I did, right? I purchased 3 times in this period. I did.
You didn't average when it fell down.
No. Again, in options, they say don't average down, but average up.
Psychologically, we try to average down.
Yeah. Yes. Yes. Hope is not a plan. Yeah. Exit strategy again. Let's. I think I covered briefly. If your hypothesis fails, close the trade. In this case, hypothesis, your stop loss level is hit. Close. No emotions. Done. Averaging down is not a great strategy, which again we talked about it. Yeah, for Lotto trades which is expiring in the same week, I always prefer to book 50% of position at 100% profit. First of all, getting 100% itself is rare, but I consistently get that, so I'll always exit and leave rest to the market with a stop loss. You can also use trailing stop losses in options. Always keep some runners, but again, it's not a hard and fast rule. You exited with profit, move on. What I could have done differently, right? So rollover, I mentioned about this couple of times in our group, so this is my chance to explain what is rollover means. Rollover means basically you have an existing position that's in profit. Now you can roll over the position and get some money out of the market. There are two ways to do that. You can sell the existing position, buy at a same expiry but a higher strike. That's one way. Another is you can keep the same strike but at a earlier expiry. Let's say I'm going to go through example. So let's assume that today I'm still holding these calls at they are trading at 45, right? Now I have two choices. One is roll over to higher strike in the same expiry, or I roll over to January expiry. Okay. In this case, I'm saying higher strike, but I'll tell you the reason. Okay, let's go through the rollover option 1, which is this is the May options expiry. So currently this is what I'm holding, right? It's 45.77 for easy computation. Let's assume that's 40. So I thought about two choices. I can roll it over to 45 strike, or I can roll it over to 50 strike. You can roll it over to any strike. I'm just taking two examples here. Can you go next? So if I roll over to 45 strike, what would I do? I'll sell the existing call I'm holding. I'll buy a new one at 30.48, which is at a 45 call. Now, what is the benefit of that? The credit I'm going to receive according to this is 15.29, which means per contract I'm getting that money out of the market. Now it's going to sit in my account. So if I bought 10 contracts, that's $15,000. Now listen one more thing. If I bought 10 contracts, I paid 6,000, right? I'm getting 15,000. I'm already in profit on, and I still have my leg in the game, right? So because as the stock keeps going up, this can keep going up and give me more profit. So that's the benefit of rollover. Instead of exiting completely, you can roll over to a different strike and still play the game and make the profits. Now, another option is actually this should be Jan 2025. Oh, sorry, it's the same, but 50 strike, right? In the 50 strike, yeah, here I was buying 45, here I'm buying 50. In 50, I'm going to receive 17.29, which is 17.29. Now the question is, which is better? Can anyone answer? Which is better?
The first one is better.
Yeah. Why? Because the max profit you could have in this is you are already getting it. So there is nothing to lose in this case. If you do this, you are going to lose 12,000 minus 729. You are going to lose the 280. That's an opportunity cost. So this is better. But on the other side, you are getting higher credit out of the market. That's not a very bad idea, right? For you, if you think about it, you started with 6,000. You are getting 17,290. That's almost 3x. So it's not very bad, but this is definitely a better criteria.
So the probability wise, the
45 to 50.
Yeah.
45.
Correct. So let's see the other example, which is now I'm changing the expiry. Initially I had March, now I'm changing it to Jan. Now the better thing would have been I bought 30 in Jan. If I bought 30 strike in Jan, I am sacrificing 2 months of expiry time, right? Because previously I had 5 months to expiry. Now I have only 2 months or 3 months to expiry. I am sacrificing my time. but the premium I'm getting is not a lot, like maybe $100 extra. For $100 additional gain, I didn't wanted to lose the 2 months of extra time additional I have. That's why in this case I'm not suggesting 30. Again, let's analyze 45 and 50. In case of 45, the premium is very similar. So it's still you're going to get 15,000 back for 10 positions. In case of Jan 2025, you're getting more premium here, which is 20,000, almost 3,000 more. But again, what you need to think about is, for additional 300 per contract, I am losing 2 months of time. Is it worth? It's up to an individual to think about whether that is worth or not.
Praveen, just a time check.
Yeah.
Inka enta undi meeku?
I think another 10 minutes.
10 minutes. Is it okay? Maybe at snacks, not everyone can go at the same time.
Sure.
Can
Yes.
we let
Yes,
half of
yes.
the people go and then they come back and then
Yes.
the other half will go? So, can you guys? It's not much. And then come back and but be very respectful of the place మనం play to Thank you. Sorry for that.
The flashback, don't keep it anywhere else.
Okay, let's go to the next one. Oh yeah, what are the benefits of rollover, right? One is you can take sizable profit out of the market, so that at least you're reducing your risk. Who knows, right? By March, again, market tanks and PLTR goes back to 30. Your premium is going to be $3 or $2 or even less than that. So by rolling over, you're reducing the risk and you're taking out the profit, and you can invest in some other stock for that. And you're still in the game because of the higher strike, and you reduce your, even though you reduce the potential, but at the end of the day, what this means is, what I wanted to convey was, if you held at the 30 strike, let's say the stock was at 100, if you would have exercised that 30 strike, you would have got PLTR stocks at 30. That's the whole game of playing a call option, right? Even if the stock goes to 2000, you are going to, if you exercise the stock, you are going to get it at the 30 strike. You are going to take it out. If you go to 50, now you need to buy at 50. Okay. Another extra strategy can be converting your call into a debit spread. So you are already holding this call, right? So let's say on 10. So okay, on 10:15, the day it hit its all-time highs, which is 45, right? What happened? I exited 50% of the position on that day. Instead of exiting 50%, I would have done one more thing, which is converting my call into a debit spread. How would I do that? So I could have sold 45 strike for the same March expiry, and I would have collected $6 of premium from the market. So this would have covered my the premium I paid for that. So my trade is now zero, because initially I paid $6 to get the 30 strike. After 2 months of 3 months of wait, I am selling another higher strike at $6. So I am getting my premium out, and I have still additional upside potential left in the market. So as of today, the 30-45 call spread is around $15, which is a max profit possible. So if I sell that, I'll be still at 1,500 profit per contract. That's the max. Now, between rollover and debit spread, which one do you guys think is a better option? It depends on the risk, but today, in hindsight, rollover looks like a better option because you are getting similar profit out of the market and you have still upside. In a debit spread, you are limiting your upside. In a debit spread, in this case 30-45, stock can go to 1,000, your profit is limited to this 1,500. So that's the negative side effect of a debit spread. So, yeah.
Open spread, watch for some days.
Sorry?
Open spread, watch for some days.
pros of it, like.
Okay, let me quickly cover debit spread because we are on the topic. In a debit spread, you buy a lower strike call, you pay high premium for that. At the same time, you sell a higher strike call, pay low premium. So in the end, you will pay some debit to the market to hold this spread. Why spread over call, right? What is the benefit of it? Spread costs less compared to a call. Let's say if you would have bought only this, there is a high premium to it, right? Spread value, so that's why the whole spread itself moves slowly. But it can be good and bad. Bad in the sense when the stocks goes down, the value is also going down very slowly. So it can be good and bad, it based on your risk appetite. And spread can be less forgiving if a timing is bad. I'm going to show an example. Okay, this is the Tesla spread Lotto I alerted in the trading group. So this was 8 to 9 days before the elections. I said that if Trump wins, Tesla can go to 300. So this is my Lotto towards that. So I said like, okay, per contract it costs only 500. The upside is 2000. So why not take a gamble on that?
These
So-
days Praveen became lottery Praveen now. You know? It's okay, sorry. Go ahead.
So yeah, so I'm basically buying 275 call at 800, 300 call at I'm selling 300 call at 3. So the spread I'm going to pay is only 500 because again it says 8 in the sense like option price is at 8, but into 100 we need to always trade. So yeah, max profit is 2000 per contract. So the risk reward is 1:4. Great. It's for a low trade. It's a great risk reward. After 2-3 days later, my timing was bad and Tesla kept going down. They sold all Trump favored stocks before the elections because suddenly Kamala started picking up. So the trade I paid $5 was trading at $2. I think Kumar, you bought or you pointed out that.
The average done knowledge.
Yeah. So
Sometimes.
so yeah, these things happen. It's a loaded trade, so that's why I held it because elections weren't over. So I was ready to take that risk. So now the price is 2, the loss is at $3. So yeah, now let's look at this, right? If I plainly bought 275 call, that went down 70%. But if the spread went down only 60%. Again, there's a 10% difference. That's what I said. It's less forgiving in the sense that even if it goes down, it won't go down as much as your call. But on the side effect of it is you are limiting your upside. That's the problem. Okay, next what happens? Trump wins. So yeah, and we exited. I took 5. We exited a couple of them at 12. I think another 1 or 2 at 18, and finally we exited this at 21 or something. So we paid 500 per contract. We were able to exit at 20 or 2000. This is where I say the max profit was 2,500, but I don't mind this profit was 3x already. It's good enough for me. Because again, you don't know with options if the stock tanks after some news or something, I'm going to lose that. So 3x profit was good enough for me. So. Okay, now if I had time travel, let's say I'm taking back to the same day. I want to explain how I did. What I posted, what I showed you is what I showed everyone in the group, but what I did was slightly different. So let's take a look at that.
Guys on the left side, please come. Left side already. Right side.
So through this, I also want to explain the idea about adjustments, how what kind of adjustments you can do in the call. So this is what I did. Instead of 275, 300, I bought 270 and 300. But risk reward was still the same. I paid 600 per contract. My upside was 2400 per contract. and risk reward was still same. So the trade that I alerted, trade I took, risk reward was same, but strikes were different. Again, let's relive the moment. So after 2-3 days, stock tanked. This guy, this should be 270, sorry, 275, 270. It went down to 3, and the 300 was there both in common. It was 0.5. The adjustment I did is, this is 0.5. I bought back that. That's the adjustment I did. Initially, I sold it for $300. I bought it back for $50. So I'm kind of gaining on that trade, but the thing is, I'm making this guy free. Now this guy can fly
Upside
without any.
potential is unlimited.
Exactly. Upside potential is unlimited. So what I did is I bought back that. This is something I do. Again, a tip if I can suggest. Whenever I get into a spread, I always put a buy order for the sell call for a very low amount, 0.5 or 1. Because
you are okay to do.
Exactly. So what I'm left with is this, and yeah, the spread is, I'm converting the spread into a call now. Again, Trump wins and the stock flies, and this is how I exited. So again, I exited on the while it was going up. So that the 270 call, I was able to exit around 42 instead of, so because of that small adjustment, my profit potential increased.
Get back into the section. There will be more room here for others.
Okay, now let's quickly talk about what are the cons, why we shouldn't do spreads. Again, limited risk, but limited upside also. Call options for 3 months or above expiry moves pretty slow, even though stock went in your direction, because both the legs are increasing, both the legs are decreasing, so they move slowly. Call options on these volatile stocks, they move very badly. So it's not worth taking, not call option, the spreads move on these volatile stocks very badly. So on these stocks, it's not worth it going for spreads. This is I already shared. For the sell option, always put a buy. You might get lucky and get out. Okay, any questions?
How to manage this?
100 slides and 130 ఉన్నాయి.
Okay, 126. But I think almost. Yeah.
We have spread. How to manage a single leg?
You can take out any single leg anytime. Again, I don't know about Robinhood, how easily you can do that. Thinkorswim, you can do it very easily. So,
These are very bad.
okay, I have one last example and then I'll be done. Okay, this is very advanced strategy. I want to make sure, because this involves selling an option, which I don't recommend. Only if you know exactly what you are doing, please do it. Otherwise, stay away. Ignore this strategy. It's called risk reversal. It's a high risk, high reward strategy. What you do is you sell a put. When you sell an option, you get money from the market. And you can use that money to buy a call. So you are basically funding this call from the market. So that way you are putting very low money into a trade, but if things work out in your plan, you can gain a lot. I have an example. This is again I
It's at
alerted
the
people.
which please. Whoever did not have. Sorry for keep interrupting. So that we can keep continuing. Half an hour break ఇద్దాం అనుకున్నాము. ఇంత మంచి కాంటెంట్ ఉంటే ఐ థింక్ నన్ ఆఫ్ యువర్ షోయింగ్ ఇంట్రెస్ట్ టు టేక్ ఎ బ్రేక్. ఇట్స్ ఓకే, ఇంటికి వెళ్ళి బ్రేక్ ఎలాగో తీసుకోవచ్చు. ఇలాంటి మనం
Just leave some for me.
ఉంది.
Just kidding.
ఇక్కడ కూడా ఏమన్నా వెళ్ళాలంటే వెళ్ళండి. ఓపెన్ ఫర్ ఎవ్రీవన్.
Thank you.
Everybody.
Okay, we'll come to the pros and cons of that.
Yeah.
Okay, we'll come to the pros and cons of that after I explain the method. Okay, this is again an alert I shared in the group. I said that, hey, GameStop, I'm selling a put for 15 strike, or I think it was 15 strike. No, 20 strike. I'm selling a put with 20 strike. What happens with that is I'm collecting a premium of 450, which means I can buy the stock at $20, but I am already collecting $450 as a premium. Per contract, my cost basis will go down to 15.5 because I am already collecting 4.5 from the market. So that's how selling put works. So, but when you sell something without having any stocks, the broker will keep some money aside from your account as a collateral. That's for this case for 100 stocks at 15.5, the money you need to buy those 100 stocks is 15.1550. That's what they keep it aside in your account. Okay, next please. Almost after a month, what I did was I used that money that I collected to buy to the upside. What you need to understand is both selling a put and buying a call, both I am expecting that GME will go up. I could be wrong. In that case, what happens? Both will lose the money, and I am going to lose that trade. But this was a risk. I felt it was worth taking a trade. What I did, I bought July expiry for 4.2. So my total cost is, I got 4.5. I paid 4.2. It's actually a debit. Market gave me $30 to trade this. So I'm not paying in this. Usually when you play an option, you pay money to the market. In this case, I'm not paying the market. Market is paying me to play this trade basically. What happens? After a few days, the 4.5 goes down to 1.05. I'm at 70% profit. Get out. As I said, I don't want to wait for 0.1 or 0. I got 75% profit. Get out. Now my call is free, or 4.5 minus 1 is 3.5. So my call is already free because of this. Now I have profit from the market, right? How much is profit? 340 per contract. I have profit in the market. Luckily things work out for me, and GameStop started flying, and the call I bought for 4.2, it went up to 25.4 or something. So overall trade profit was 340 on the sell side, 2120 on the buy side. So overall I made 24060 without even paying a penny to the market. Again, it worked out. It does not mean it will always work out. So you need to be very careful with these things. That's why I say high risk, high reward. The pros is very low premium paid, but sometimes you will even get the credit to pay that. But the cons is you're betting in one direction. If the stock doesn't move in your direction, you're screwed on both the legs. Yeah. So.
Praveen, how much was the loss if the trend did not work out?
If it did not work out.
In this case, let's assume, right, on 7, let's assume, okay, stock stayed below 15, okay, the call I bought, I'm going to lose all the premium, 4.2 gone, but the premium I collected, which was below 20, I'm going to get that. So that way I'm not losing anything, but I'm losing the opportunity cost because the collateral 1550, they kept it aside. I'm unable to use it for anything else.
That's okay, 1 million.
That's okay.
No, but premium what you pay for call, right? So you lose that also.
Yeah, that's what I'm losing on both the sides. Yeah.
So what is the difference between like rather than asking what is the difference when you decide for buying a call versus selling a put, because both are same, right?
So selling a put makes sense if the market is moving sideways. The stock is also moving along with that sideways. Because if I buy a call option, if the stock moves sideways, I'm going to keep losing the premium because of the theta decay. But selling a put, if the premium loses, I'm gaining it because I'm selling at a higher price. I can buy it back at a lower price.
So during market consolidation, putting a call is
Exactly. Which is again selling anything, practice in a paper account for 3 to 6 months. Only if you understand all the risks, do it. Otherwise, don't. Any other questions? Good.
Why did you choose to sell a put for GME? Was it consolidating or it's just your call?
So I saw support around 20. So it was going up to 30, 35, 40, but always comes down to 20 or 18, and it was not going down. So someone was willing to buy it at 20. So by selling that put, I'm gaining 4.5. So market is giving me money to sell at that level. So it's same support resistance. So 20 was acting as a support for GME multiple times. I didn't saw it like one time. I saw it 3-4 times. Like worth taking that.
Basically, all your decisions are driven by those schemes.
One question. Like when you buy it and then when you sell a put, right, it is immediately sold. Like
Yes.
who is buying that opposition?
Okay, so in options market, there are people called market makers. Their job, so companies like Citadel, have you heard about Citadel? Yeah, there are companies like Citadel. Their whole job is to create the market for options. So for an option, there is always a buyer, there is a seller. Their job is only to make sure that there is always someone. For stocks, you and me interact through a broker. But for options, we interact with companies like Citadel. They are called market makers. It's their job.
And also like there is always bid versus ask. Like
Yes, there is always so I always play options in liquid stocks where lots of people trade. So SPX, Tesla, Amazon, all those ones. There are illiquid stock options. I don't recommend them. Next.
Last question, Idi.
Yeah,
last question.
So my question is more in terms of your psychology actually. So you were bullish on value. So you have option to buy a call option or do the risk reversal strategy, right? What was the conviction which gave you the data points to go say that okay, let's not go with the call option and let's risk it and then go with this risk reversal? Anyway, it is giving money, that's fine.
Yeah.
But you're still putting that 1500 in the lock listed. I mean, you could have gone with the same money with the call option, right? What was the extra or what was your thought process which gave you the confidence to go with that risky strategy than the call option?
Yeah, so when again it depends on your conviction. With GME, I had that conviction. I knew that the market was recovering, right? So all the FANGs were recovering, and then slowly the next level stocks were recovering. At some point of time, I was hoping that GME will also do. I didn't know whether it's going to take 2 months, 3 months, 5 months, 6 months. That part I don't know. So I took that bet just based on that.
Cool.
Okay, cool.
Thank you guys. I think first session ki and break ki and Praveen, I think మేము అక్కడ చాట్ లో వింటున్నప్పుడు మీరు పాపం ఇక్కడ మేమంతా బ్రేక్ తీసుకున్నాం, మీరు తీసుకోలేదు. బట్ జెన్యున్ ఫీడ్బ్యాక్ మిమ్మల్ని ఊరికే పోడడం వల్ల కాదు కానీ ఎవ్రీ వన్ ఇస్ సెడ్ దిస్ ఇస్ ద బెస్ట్ దే హ్యావ్ హర్డ్ త్రూ అవుట్ ద క్యాలెండర్ ఇన్ వాసవి. దిస్ ఇస్ ద బెస్ట్. సో really appreciate and thank you for putting together your time and sharing. December holiday time, chala takko time lo Kuber and Money were like pushing us. Like I said January, they said no now, and I said online, they said no in person. I totally get why you guys made that call, because definitely in person impact is in person impact. So thank you so much. And ఇది కూడా అందుకే రికార్డింగ్ కూడా మనము వెంకటేష్ అప్పల he was doing it so that సేమ్ ఇది విన్నా కానీ మళ్ళీ ఇంటికి వెళ్ళి మళ్ళీ వింటే there is an impact, and we will with only your permission we will try to post online. And then the slides ఇవాళ వచ్చిన వాళ్ళందరూ కన్సిడర్ డొనేటింగ్ $100 or something, and then we will give you slide also. One slide, okay.
Especially the ones that are not registered, we let you in because of the good heart, so you have to pay us back.
అంటే ఏం లేదండి, మళ్ళీ మన స్నాక్స్ కే వాటికి మేమేం మన ఇంటికి తీసుకోం కదా. సో ఇట్స్ ప్లీజ్ టేక్ ఇఫ్ జస్ట్ కన్సిడర్ ఎవ్రీ వన్ ఆఫ్ యూ జస్ట్ మేము ఇన్ ద స్టాక్ గ్రూప్ అండ్ వాసవి గ్రూప్ విల్ పుట్ లైక్ ఏ పేపాల్ ఎట్ సంథింగ్ టైప్ థింగ్. whatever. I mean, it doesn't have to be 100. You can do more. 1,000 చేసినా కూడా మేమే అనుకోము. But minimum 100 అయితే అనుకోండి. But thank you so much, Praveen. And we already have anything else, Praveen, from last words from you?
Yeah. So I actually pushed Kuber Garu to do this before the holidays because my sessions are usually lots of content. I want people to go back and have time to do some homework. Otherwise, I keep giving sessions. If you are not learning, it's useless. So the reason I push them to do it now is because in holidays you have downtime, you have things to learn. This can be one of those things you can spend your time. Thank you, Kuber Garu. Thank you, Mani. Thank you, Sudhir, for making it happen.
Thank you. Thank you. And by the way, నా వైపు నుంచి నా టీం వైపు నుంచి స్మాల్ సారీ, ఎందుకంటే కొంచెం పుషీగా మెసేజెస్ పంపించినట్టున్నా నేను, అంటే డోంట్ ఆస్క్, డోంట్ ఇంటరప్ట్ అని అలాగా. ఇట్స్ ఐ హోప్ ఐ డెంట్ కమ్ అక్రాస్. ద హోల్ ఇంటెన్షన్ ఈజ్ ఇంత మంచి సాలిడ్ మెటీరియల్ మనం కవర్ చేయాలి అంటే the questions can wait, we can do our own self research, but I wanted to extract maximum out of him for all of our benefit. Okay, so
it worked because first time I am able to cover my full day.
Yeah, I attended the last two, so that's why I know we are improving, right, each time, so we're trying our best. So that doesn't mean that we want to be rude. I'm sorry if we are, or if we came across like that. The intention is good. That's why we got such a nice session. Thank you.
రియల్లీ కుడోస్. ఫ్రైడే చాట్స్ కూడా పెట్టి కూర్చున్నారండి.
Okay, all good.
So yeah, another big round of applause before we invite the next speaker.
Okay, so you want to the next one also amazing, awesome ga untadi. Kaapothe ఇది మనము ట్యాక్స్ మన మనీ ఎర్నింగ్, మనీ సేవింగ్ విత్ taxes or real estate. These are the hot topics మన కమ్యూనిటీకి. So I think Kuber Garu, you want to introduce Ravi Garu? ఇవ్వాలి, ఇది ఇస్తేనే వాళ్ళకి ఇస్తేనే మనం. ఇక్కడ ఈ యూఎస్బి ఛార్జింగ్ ఇది పెట్టుకోండి. సారీ, వన్ మోర్, మన రిమైండ్ చేశాడు తను, అంటే నాట్ జస్ట్ ద పేపాల్ టైప్ స్టఫ్. ఇఫ్ యువర్ కంపెనీస్ ఆర్ సపోర్టింగ్ volunteer hours, I think for all the number of hours you have been here, if you can match or something, that will be great. Please consider that also.
One time match. So guys, like every company has like November, December lo meeku one time match అని చెప్పేసి $50. Guys, please, small announcement. One time match అని చెప్పేసి each and every company like T-Mobile గానీ, Service Now గానీ, ఏదైనా కంపెనీ one time match అని చెప్పేసి October, November, December లో $25, $50, $100 జస్ట్ మీకు ఒక దే జస్ట్ యాజ్ టోకెన్ ఆఫ్ థ్యాంక్స్ మీకు ఇస్తారు. అది జస్ట్ ఇట్స్ సింపుల్ క్లిక్ అండి. అది చాలా మంది ఏం చేస్తారంటే తెలియక వదిలేస్తారు. అది ఇఫ్ యూ లీవ్ ఇట్ జస్ట్ గో అన్వేస్ట్ అంటే వేస్ట్ అయిపోతుంది. సో జస్ట్ అది మీరు వన్ క్లిక్ తోటి ఇక్కడ డొనేట్ టు వాసవి థియేటర్. $50, $100 అయినా కూడా ఇట్ విల్ బి వెరీ మచ్ యూస్ఫుల్ టు ద కమ్యూనిటీ. సో ప్లీజ్ చెక్ దట్ ఈమెయిల్ అండ్ డొనేట్ ఇట్ టు వాసవి థియేటర్ సో దట్ వీ కెన్ డూ లైక్ మెనీ ఈవెంట్స్ లైక్ దిస్. థ్యాంక్ యూ.
Take your coffee to Rama.
19 members are.
Yeah. Thank you. Thank you.
Also, one last thing. Where is Rama? I use some memes on Rama. I have full respect for him. I hope he doesn't mind.
We mind.
So I think, guys, in the future we will also do some sessions, different sessions.
Yeah.
So Prasad Garu, Kuber Garu, their team are going to figure out what are the right one for majority of you. Okay, so they're going to do. But now, can you introduce the next?
Yep. So now that you guys know how to make money, I think so Ravi Garu is going to tell you how you can keep most of the money. So he has a wealth of knowledge in this field. There is a reason why we chose him, and then I really appreciate. We had a different topic. We originally planned a different topic, but Ravi Garu was able to change his topic on the fly. I really appreciate you doing that. And even in that, we had a little bit of scope creep as well, because today's session was about the stocks. So even tax strategies go in any direction. So we kind of expanded a bit and confined a bit, and we kind of put together more apt to the session that we already had. So I really appreciate you doing that, Ravi. And he has done a session in the past as well. So you guys have seen how impactful it was, and it kind of enlightened a lot of people. I got very good feedback on the topics he covered and how depth he covered. So he actually took
Benefits selection.
Benefit selection. A lot of people, even though they thought they knew, but later I got a feedback saying that I did not know that it can be done in this way as well. So, and he's going to cover pretty much the same topics. We think that we may know something, but he may give you more tips into it. So that's why he also made even the title itself makes a hooked onto the topic as well. And I mean it when we talk about what he's going to cover. I think that's exactly what he's going to do. And without further ado, let me invite Ravi Gaur with a big round of applause.
Thank you, everyone. The first session was about losing money. This session is holding on to your money. Okay. So, some disclaimers here. Okay. These topics are complex, so not everything I say is going to work for every single person. Right? It depends on the circumstance. Some people have houses, some people don't have houses, some people have rental properties, some are on H1, some are green card. So very wide variety of people. Some of you have a lot of experience, some of you maybe just new getting started. So I just want to give a disclaimer that I try to cover as much as possible to the general audience. But if you have specific questions, I'll try to address today or one-on-one or in WhatsApp. And so the session broadly covers these areas. So we'll talk about the stock compensation. Most of you are working tech companies. So RSUs, ESPP, I'll talk about it. This is December, right? So tax loss harvesting is something you can do, before you end of the year. So we'll talk about it briefly. And then we'll talk a little bit about, what are things you can do. Some of these things you would be already doing it. I just want to reinforce and tell you, maybe there are one or two things you can add. And then last couple of topics, home ownership, rental properties, I'll briefly touch. Very complex topics, but I'll just give you pointers so that you can explore on your own. And sorry, I forgot to update it. There are few advanced topics as well. I just kept it as a placeholder. A lot of people were asking. So some of these will only make sense like if you have more than 5 million kind of network, right? So we'll not go deep into them. We'll just introduce the ideas, and then you can explore it when you reach that kind of milestone. This is the tax brackets. This is for the tax year, the year that is ending this month, and that is for the next year. Just for reference, I've kept, so you have a standard deduction for a single, 14,600, and then if you're married filing jointly, you have 29,200. Numbers will increase next year because of the inflation and all that. So I think most of you would know exactly how these things work, right? First, 29,000, no tax. Afterwards, you will pay 10% tax, between this amount, and then you keep going. It is important to know where you fit in, so that a lot of decisions will help you, whether I should do this or not. Okay, so that's the reason I just put this. Similarly, this is the long-term capital gains tax. All the short-term things you do, trading, options, it will all be done, using your regular ordinary income. Okay, that's the previous slide. Anything you hold for more than a year, that's where the long-term capital gains tax comes into picture. Most of you would have known 15%, but not known 20 and 0%. Okay, so it is theoretically possible when you are in retirement. So $94,000 is really a lot of money when you are in retirement. It is technically possible to have all your investments. Let's say you buy S&P 500 today. Let's say you're 30 years, 40 years of age. Don't do anything, just S&P 500. Sell it for the first time when you're age 60 or 62. And if you're only selling up to this money, you are paying literally 0 tax. No complex investments, no complex ideas, nothing, right? Just buy S&P 500, sell it for the first time when you are in age 60. You never have to change, right? If you buy individual stocks, like what Praveen was saying, one stock may go out of fashion, something else may come in. You would have to sell. You have to, for example, today Microsoft may be a great company. Once Satya is replaced by somebody else, we don't know whether the company will be good or not. Nvidia is good today. Whether they will be around when the quantum comes in or not, we don't know. Right? So that's basically these are the kind of things that I just want you to have in your mind, so that as you get older, as you come closer to age 60, this kind of information will tell you, where to pivot, how to put your money into different kind of baskets.
Different tax slabs, or they will include capital gains into the income.
So this is the ordinary.
This is regular
ordinary income that we do. Right? The next one is capital gains, only for real estate, stocks, options, anything you buy and sell. These rates will be. The way it works is basically this sits on top of your regular income. For example, you have $80,000 regular income already. You only have the first 14,000 that will be charged. If your ordinary income is already 100,000, you will automatically be charged in this bracket.
Sure. But the combined tax.
Combined tax, yes.
Not the
This one sits on top of the ordinary.
Thanks.
Next. So RSUs, I think good chunk of you get RSUs. You may know. I'm pretty sure a lot of you actually, never sell it. Keep accumulating it. Only when you're buying a house you sell it, and then just you close your eyes. You realize that you have 500K worth of Amazon stock or Google stock or whatever. Very, very bad idea to hold on to. Okay? If you have, like for example, so I'll tell you why it's a bad idea. Right? I mean, any company can go through different, management changes, company direction changes, company cannot innovate anymore. Things happen. So you have a grant date, right? When you get your options, there is a vest date. So nothing happens here, right? The first grant date, no tax, nothing. Just the price is determined for you. Vest date is income tax is due. That means if you're getting 10 stocks, and let's say you are 30% tax bracket, you will only get 7 in your account. 3 will be deducted. So different companies have a different way of handling it. So you will designate, say, my tax bracket is 22 or 25 or something. Some companies won't ask you; they'll automatically do it. That is just a deduction. That is just like a TDS kind of in Indian language, right? That's not the actual tax you're paying. Let's say you're getting 10 stocks and your tax bracket is 22, right? You will have 78, 7.8 stocks that is supposed to go to your account. That's when so there is nothing you can do about it, right? Based on your tax bracket, you will pay income tax. No decision to be made. And no capital gains tax immediately if you sell it. Let's say you get it on 15th of December, you sell it, on 16th, maybe $1 or $2, but no capital gains. When you sell it, it depends on whether it's short term or long term based on the time difference between vest and sell. For options, if you have more than 10% of your net worth in this particular company, I would even sometimes say like 5%, depending on how confident you are in your company's direction. Get rid of it. Okay. You get it on the best day, immediately sell. Sell RSUs as soon as you get them. If you forgot to sell it, the best way to sell it is 1 year after you get it. Any questions on the RSUs? Next.
What is the last suggestion? Sell RSUs as soon as you get?
Basically, you'll end up accumulating, So RSU is your compensation. Okay. So even if you don't try, you will end up having like 50K, 100K very soon, right? You shouldn't have more than 5-10% of your net worth tied to a single company. Even in Google, you have seen Google, Meta stocks, they were underperforming when other companies were growing. You would rather take your money, put it into a diversified place that you never have to decide to sell.
So Ravina, you also need to update disposal method and sell it, right?
What?
Like when it is vested, you're saying sell it and diversify. You also need to update the disposal method to pick that lot. To
Yeah. You have to pick and sell it.
Okay.
Yeah. Except for Amazon, I think most other companies give you ESPP also, right? So you would have lots from ESPP and you will have lots from RSUs. RSUs sell as soon as possible or 1 year after. ESPP, lot more tricky. So you have a grant date, right? So most companies follow this 3-month period, right? From January to March, they will collect money from you. They buy the stock on March 31st, give it to you. That's typical. There are companies that do it for 6 months. There are all sorts of models are there. So 2 different things. One is short term, like grant date and purchase date. Assume this is January 1st, this is March 31st. You get the stock. If you sell it up to the next year, March 31st, it is short term before that. Otherwise, it is long term. So that is one thing. There is also something called disqualifying disposition and qualifying disposition. So what this means is you got a discount. You got a 10% discount, 15% discount. If you sell your stock before 2 years from grant date or 1 year from purchase date, that discount will become your income. Let's say you got 15% discount, that income will add to your W2. And if you are in 30% bracket, you will be paying 30% tax on it. Okay. So ESPP, get rid of them after 2 years from grant date. So this ESPP alone will have 50-60K worth of stocks. You have max out your ESPP. They themselves will be easily be considerable amount of stocks. So that's the reason I'm telling you, RSUs, get rid of them. ESPP, you have to hold it for 2 years. Okay. Any questions on ESPP?
What if we sell the ESPP as soon as we get? We don't know, right? Same logic we can tell that
Yes.
ESPP
Yes.
I don't need to hold. Right?
Yeah. So if you don't believe in your company, for example, you work for Boeing. If you work for Boeing, for example, and you don't know what's going to happen to me.
I don't want to believe. Don't believe is not right. Don't want to believe.
The other way look at it is like you are invested yourself into the company, and do you want to invest more money into that?
See, your salary is already tied to the company. So this is not like a must. I mean, if you don't, if you feel that Meta is going to go down, I mean, absolutely sell it. But don't do it just for that kind of thing. Right? I'll come to you. So most of the Mag 7 companies, if you are working in big companies, and if you have reasonably good prospects, try to hold on to them for 2 years. But if you work for a company definitely may not be in a good position for whatever reason, or you are buying a house right now, right? You don't have any other cash, perfectly fine. You can sell it.
With the qualifying or
He will.
If I sell RSUs as soon as
One quick thing. Whoever is asking question, can you state your name as well?
Okay. My name is Anil Puvadi. So regarding RSUs, right? As soon as you sell RSU, then does it fall under short-term gain or as soon as you
Can you
RSU?
go back to the previous one?
It's not short-term?
Yeah. So RSU, income tax is already paid. If you're supposed to get 10 stocks, they'll already take 2 or 3 stocks from you.
But the gain, profit, they still
Yeah.
tax, right?
If you sell it immediately, it is like a short term.
Yeah.
But the stock hasn't moved much. You got it on December 15th. You are immediately selling on 16th or 17th as soon as the market is open. Don't try to time it or just sell it.
I see.
There is not much of gain there. Maybe $5 more, $5 less.
So is it a default, all the RSUs, all the companies, they'll deduct the tax and bill?
Yeah.
The standard, right?
So
It's
you
not
need
to
to
company.
deposit the money if you don't want to sell your stocks, not necessary.
My name is Ramesh. Selling RSUs a day later or two the first in first out kicks in actually. So
you can select the batch, like if it is fidelity or
at
whatever.
the time of exercising, we have sell to cover, that means sell to cover the taxes, or sell to cash. That means we sell and get the cash out.
Correct.
Don't need to wait, there's no timing actually. On execution of RSUs, you take the money, that's it. There's no day 2, day 3. If you do that one, it's first in first out comes.
You're saying you can change the election method as sell to cash, as well as it is.
Yeah, if a company allows, definitely. I don't remember seeing in Microsoft.
Amazon does it, Microsoft does not.
Okay.
They want to sell it to
My question was with qualifying disposition or disqualifying disposition, what is the impact of that? So does qualifying disposition mean we'll be paying at the long-term tax rates or?
So as long as you come, your name please?
Rajesh.
Rajesh. So if you cross this line, it's long term. Before it is short term. But with disqualifying, what happens is you got a stock at 15% discount. That 15% is now added to your income. If you sell it after this, that 15% is forgone. Right? Nobody's taxing you for it. Okay. Next. So tax loss harvesting. I just took an example. Right? So, AMD shares. So you bought 100 shares of AMD, I just picked that date because it's convenient. So March 2024 it was 225, now it is close to 125. What you could do is basically sell AMD today and then get 10K of losses. Okay, basically this loss can offset any gains you have. Short term, long term, doesn't matter. What happens is short-term gains offset short-term losses, long-term gains offset long-term losses. If there are still left, they cross out across.
So what would be the end date for these to sell for the current year?
December 31st.
December 31st you can sell and you can buy on January 1st.
No.
There is a reason for the question.
Yeah, I have a next slide that explains it.
Okay.
So, next slide I'm actually covering the value. So basically you can buy AMD again in January 16th if you really trust, you want to be part of AMD, perfectly fine. Of course there is, when you're selling here, buying, waiting for 30 days, anything is slim. You're not really earning anything here. If you buy stock again for 125, assume that it's flat, the loss you had, instead of booking in 2025, you booked it right now. Okay, your cost basis is 125. So whatever up or down that happens, that's all you have. You have not earned any new money by doing it. This is simply, for example, 2024, you happen to have more taxes for any reason. Maybe you got a good bonus or something. This is just a lever. It doesn't get you more money or less money. Okay. Yes, sir.
Yeah, I'm Kumail. So how about ESP? So it is treated as a, let's say you sold something, but your EBT certificate is deposited within 30 days. Is that
yes.
wash sale?
Yeah. Anything and everything. I have a separate slide for.
So AMD, we sell the stocks at 10K is the loss, and we show it for the tax loss harvesting. So what if if at all you don't want to risk if AMD goes up in the next 30 days, what I have done is I bought an AMD focused ETF.
Yeah. I'm talking about it.
Okay.
So when you said offset, so short-term losses with long-term profits, we can merge it or we can?
Yes, you can. First, they will cross across the same level, short-term versus short-term, long-term versus long-term. If it is still balanced left, there is $2,000 of long-term loss, $3,000 worth of short-term gain, then they'll cross it. So the difference between short-term and long-term is you have a huge difference in tax rates, right? Long-term is around 15% most of the people, whereas the short-term you could be, most of you are techies, so you would be taxing, getting taxed around 30 or 32 kind of thing. So you buy AMD and buy SMH, which is basically semiconductor ETF. You are not lost exposure. I mean, this is just a suggestion, right? You have not lost exposure to the semiconductor industry. and then so you probably got into a better thing, and also saved some taxes. So we all make bad decisions sometimes. This is basically a way to get out at the right time, book it.
Ravi garu oka pani cheddam ante we are only on 9th slide and we are already 5:20 alaga. Can we take only questions at the end?
Yeah.
Remember the slide, take a note on your phone or something and ask.
Sure.
Okay.
Just one last question.
Can I buy options and still buy options on AMD? Would it count towards what?
Next slide.
Wash it.
Okay, so you have wash sale. Okay. It will work across stocks, bonds. So all of these are covered. Stocks, bonds, applies to substantially identical securities. That means, MSTR stock and MSTR options, they're all considered the same. Okay. It is not very well defined by IRS. For example, you could sell, SPY by, like a total market, let's say. They are not identical. They are slightly different, but 90% they are same. So you can play this game if you want, right? For example, sell, AMD by Nvidia. Next year, maybe switch it to something else. It is doable. Okay. So Praveen was talking about a lot of trading, right? So most of it is wash sale. You are buying and selling the same stock over and over. You cannot book any of those losses. Any questions on wash sale? Next, I'll not ask questions.
So if we sell before 31st December, wash sale is not a problem.
So this can be done any time in the year. Okay. December is just like you lose the 2024 window. That's all.
Okay, but if you exit before same tax year, it's taken place. Wash sale is gone.
No. Sorry, can you go up, please? So wash sale is basically 30 days before and 30 days after. You should not do the opposite. Basically sell, buy, sell. Or buy here, sell it, again buy. There should be 30 days gap between this. If there is, then you are allowed to take the losses. If you do it, for example, you buy 23 days before, sell it, then you cannot take the loss.
Ravi got one question. Manoj here. So let's say you sold it for the profit, and within the 30 days you opened the same position again. Is that?
No, that's not a problem.
It's not a problem.
It's not a problem.
It's not a wash sale.
Yeah, it's not a problem. When it's tagged as a wash sale, but it will not affect you.
So only if it is like if you close it for the loss, then only.
Yeah. Then
$100.
So
just for a joke, and also no side talks, please.
So I just want to give all the different things. The slide is not exhaustive. Okay. There are intentionally left out few things here, and this is mostly covers a good number of people. So a lot of times people ask which ETF to buy, which stock to buy, and all that. Since 2009, large growth have been dominating the market. Not value, growth. Bigger companies, but that are also growing. Value is basically company is undervalued, right? For whatever reason, right? For example, Boeing could be a reason. Still has a lot of intrinsic value. It's people only they can make claims. Right? So that's kind of like a large value kind of company. Right? So should you always put money in large growth? No, right? We don't know how it will be 5 years from now, 10 years from now. So that is a decision you have to make. Along with, of course, data. What else you have invested? So that will tell you. Should you keep being more biased towards large, or have some exposure? If you have some exposure, how much you want to have in small cap? How much would be value versus growth? All of those nuances, that is something you have to figure out for yourself, or maybe take somebody's help. You can talk to me as well. And then bonds and treasuries doesn't make sense for most of the people. Okay, you first should start thinking about it when you are like 55 plus. Okay. I don't see a whole lot of reason, except for situations like you are doing a you're planning to buy a rental house or a primary house, and you need to park the money, yes. You need the money in next couple of years, yes. Otherwise, if your 401k invested in bonds or target date funds, switch it to growth. International, most of you would have some money in India, okay? So that's one way to get exposure. I don't really, encourage people to put money into, for example, European stocks and all that. There was a time, if you go back to 60s, 70s, Japan was really doing well, right? Europe was doing well. They're not doing well. Doesn't mean that, in future it will be the same thing. But today, as of today, US is much more, in a stronger position to beat, because of AI, quantum, or tech, or whatever that is. But things can change, right? For example, some really big breakthrough comes from, say, France, in healthcare or something that could completely offset. So, important to have exposure, but again, if you are less than 2 million, 1 million, don't worry too much and get most of your money here. Precious metals, don't really recommend, unless your wife ask you to buy jewelry, you say that let's buy a coin or a bar and then move on. It's okay to have 2%, 3% exposure, but not a standard. So culturally, we are much more likely to buy real estate. We'll talk about some slides there. Annuities, whole life, 529 if you have kids. Not a great for Washington State, but we can explore that. These two things have their place in some situations. So buffered ETF is basically if you want to have your money protected, okay, but it's okay if it doesn't grow very fast. So if you need money that is in next 1 year, 18 months, 2 years, this is a relatively new product. That is something you can use. What they do is basically they create an option contract, both sides. So you buy, let's say you buy in December, they can guarantee you up to next December that your money will not lose, or if it loses, it only loses, less than 5% kind of thing. Right? You will sacrifice some upside, and you will, there are different types of contracts. Either you not lose anything or only lose up to 5%. They can guarantee you and deliver it by using option contracts. So this is something you can buy in the market. They're liquid in the sense you can get out if you need money anytime. Okay. So next slide. Sorry.
Annuities and IUL, can you just expand a little more?
We'll talk in the end. Sorry. So I think there will be time. I don't have a lot of so we will definitely talk. So some of these things will contradict the previous session. Buy and hold. So buy and hold, I can't tell you to buy and hold NVIDIA, for example, right? Maybe 5 years from now, NVIDIA may not be good, great company to invest in, right? So when we say buy and hold, you should also have passive investing. That's like S&P 500, total market, maybe ex-US, whatever. Max out, HSA, 401k and Roth. If you have joined my first session, you would know. So if your company allows, mega backdoor, do 70,000 here, 8,300 around that, 7,000 here. So if you put just money, forget about everything else. If you just follow the bullet number 1, if you're one person working, you will have $1 million in 10 years. If wife and husband working, you'll have $2 million. You can call it a day and go home, right? You can retire pretty much. Nothing else, you don't have to follow any option strategies. You don't have to do anything. I'm not trying to discourage you from trading.
Trolling previous session. He's like, I'm here, please stop.
So let's say you're 25, 30-year-old, came from a decent engineering background, working in a FANG company right now, the 25, 30 years of age. If you have time, you should actually, this is non-financial advice. So this is, a lot of people don't realize that majority of the financial advice is more of psychology. Managing your expectations, understanding, what you have, what you don't have. For example, you say, I want to retire with 50 million. No, it's not possible. Some of you, it's not possible. You have to basically work with the expectations, what you have. Maybe, you have to start a company to get there, or maybe, you have to reduce your target. So a lot of it is basically psychology. So, the reason I'm saying, if you are 25, 30 years of age, if you have time, spend the time in lead code. Getting, a 200K to 300K job is much more easier than making 100K in market. So that's basically my, and if you have already hit your ceiling, right? Some people will just become like senior manager level and then never grow in the career for whatever reason, right? Some people will become directors. That's perfectly fine. That's when you will start, okay, I'll probably start investing in real estate, I'll probably do some trading or whatever, right? So, not fully discouraging, yes.
I think your point is valid. Option trading is not everyone's game. I think that is something everybody has to do. It's not easy.
And if you do it, active in the sense picking stocks, for example, is Sound, IMQ, whatever. Sometimes it is interesting, right? So the passive investing is very boring. Let's say you have 100K, you put all 100K in S&P 500, there is nothing else to do, right? So it's boring. So what you could do is basically have 5-10% of the money that you can do active, right? You actually pick stocks. Maybe you win some, maybe you lose some, but do it in Roth IRA. Why Roth IRA? There are no taxes. You buy, sell, you buy something today, sell tomorrow. Nothing. You don't have to worry about, like, all your option trading should happen in Roth IRA. So you don't have to worry about, tax loss harvesting, wash sales, nothing else. Do all your passive investing in. So once you put your money, close to 100K, if you still have money left, then put into brokerage by S&P 500. And if you want a little bit more exotic than S&P 500, so my previous slide has different asset classes. You can look at some of them. Okay. ETFs are slightly more preferred than mutual funds, simply because how they are structured. Not a big deal if you put mutual funds. ETFs also allows you to go from, say, Fidelity to Vanguard or Schwab. Easily you can move. Mutual funds, you have to sell it before you move. Okay. Avoid dividend-paying stocks. Again, not a big deal if you have stocks that pay dividends, but it is an activity that is happening without your control. They are giving you dividend and you pay tax on it. I would rather decide to sell myself than let a company give me cash. Dividend is nothing but if there is a $10 stock, gives $1 dividend, that stock goes to $9. Okay, it's your money, they are giving it back to you. Invest in ETFs, buy and hold. Okay. Okay. So, few things. So there are most things are actually very different from owning your first home, primary home, and then having a rental property. Okay. So there aren't a whole lot of things you can do with owning house, because the Tax Cuts and Jobs Act from Trump. What happened is they increased the standard deduction so high. Basically, most people won't qualify for it. Right? So your mortgage interest deduction is only up to 750K. If you are like paying 7% or something, maybe you will touch. Otherwise, very difficult. And if you have like mortgages from 2016 or 17, you can do up to 1 million. Okay, and then you can only deduct up to $10,000 worth of taxes. That could be state, local property tax. So most of our houses property tax will be very close, but you'll be missing out on your 10% sales tax. So 10,000 is maximum. So even if you add it up, majority of the people, this is basically work if you do itemized deduction instead of the standard deduction. Most of you will miss out, but it's not a big deal. This is something you can definitely consider: energy efficient home improvement. So, for example, you have old, 15-year-old, heating, replaced with heat pump. Get $2,000 from federal. You probably get some. I don't remember the exact numbers, but $2,000 or $3,000 from PSC. If you buy Mitsubishi, there is some additional money. So you could get like easily get $4,000-5,000 money just for replacing your heating equipment. The 2,000 is the federal credit. Okay, it's not it doesn't have the PSC and other local credits. The King County has some additional credit if you take Mitsubishi equipment, for example. Okay. Similarly, insulation, air conditioning, doors. So some of these things may make sense. If you already have house, you have old insulation you need to replace, probably remember to take care of this. Okay. And if you have a business, then you can do home office deduction, otherwise you cannot. So selling the house. So if you have lived in your house for 2 years, within the last 5 years, you get 500K break. That means like you buy a house for 1 million, sell it for 1.5, you pay no taxes as long as you live in the house for 2 years. Okay? So you can always buy a 700K home, live there. Once you have more money, you switch it to a 1.5 million house or something like that. Not have to pay a penny of taxes. You can do it like once in every 2 years. You can keep moving. Of course, it's not fun. So you can deduct selling costs, right? Like when you're selling, you have agent commissions, you have listing fees, you have advertisement. All of those costs you can deduct. Like for example, you actually have 600K worth of gain, 500K is taken care, and then another. All of this can deduct your profit from that. It is treated as a long-term capital gains. Okay. At the most you will pay 15% tax, but you can deduct all of this. Okay. Any repairs you do in the last 90 days, you can deduct those also. Okay. If you make improvements to your house, for example, you replace your roof, get a new fridge, all of that will add to the cost of your home. That means for example, you bought a house for 700K, you spent $20,000 for a roof. Now your basis is 720K. So when you sell it, the profit is less on calculation. And repairs, like if you just have a plumbing issue or something, that is not, you cannot add it for improvement.
So Ravika, on the possible point, right? Married couple can deduct 500,000. The example that you said, like 1 million house, let's say if it's sold for 1.7 million, 200K, right? Like, is that can be managed in any way, like calculation, without going through all that?
No.
Let's say if you buy the new home,
you have a capital loss. For example, sell your AMD. No, I need some. House stocks everything in the same bucket.
So what is the 1031 or something exchange?
That is for the rental.
I have slide for that.
Oh, okay.
So rental properties have lot more flexibility. So you have rents received, it's straightforward, you're getting money. All of this can be deducted. You can deduct advertising, you travel to your house, mileage, or if you are in, you have a house in Dallas, fly there to take care of something, you can deduct. Cleaning, maintenance, commissions, insurance, professional services, mortgage interest, repairs, supplies, taxes, property taxes, all of this can be deducted. One important thing is depreciation. Basically, your house can be depreciated over 27.5 years. Let's say a $1 million house, 400K is the value of the land. You cannot depreciate the land. Okay, land cannot be depreciated. But the structure, the 600K can be depreciated over 27.5 years. So that's a paper money. It's not, you're not really losing anything, right? But that comes under as an expense. So now, let's say you're getting $30,000 rent, and all of this only add up to 5,000 or maybe 15,000. Add depreciation, now your rental income is zero, close to zero, because you added depreciation. So this facility is not there for primary house.
So if it goes negative, we can use it.
Negative you carry forward for future. I have more content to address that.
But when you sell that, right? When you sell that property, still the depreciation, how does the depreciation works?
I'll explain. So basically, you have the example of 1 million house, 400 land, 600K of structure cost. You have taken 100K of depreciation. How you sell it, that 100K has to be recaptured. Okay. So rental properties, depreciation is the biggest thing. Leverage, right? So for example, you want to buy an NVIDIA stock, you have to put the full amount to get NVIDIA stock, right? In a house, you only put 10%, 20%, you get the house. House goes up, you get the benefit of the entire growth, even though you have just put 20% on the house. And then rental, most asset classes won't give it. I mean, this is not an advice to buy rental properties. It comes with its own headaches. Okay. But I know that most people will buy, even if I say no. So this is things you can keep in mind. Okay. It's whether to keep all the money in stocks, whether to have rental, or having a mix. It's a decision that you have to take. My personal preference is to have a little bit in both, because things can change. So you could be 30 or 40 years of age now, okay? And if you have looked back, all the things that happened, in medical advancements, technology, things have radically changed, right? So it's very difficult to know what is going to happen next 40 years, 50 years. So most people now in this room probably could be, living into 90s, right? Something that might not have happened with your parents or grandparents, but it could happen to us, right? Because of the advancements and all that. So you really need to have money that can last for really long time, right? For example, 30 years from now, whether US will be still, a great company in a country or not, I don't know, right? So I would like to have some exposure to Indian stock market. At least we have an advantage of not putting all eggs in one country, but having two different countries. Not put everything in stock market, maybe some in real estate, hard assets, right? So that way, if things change, you still have an option to play to your strength, reduce your weakness. Cash flow, right, is one of the great things. Like for example, you have a bar of gold sitting in your locker. It's not earning any money. It's probably cost you money to put it there. So, this is, one other thing is psychologically, if you have rental, this market goes down, like, real estate market goes down, what happens is people hold on to it rather than selling it. Like, stock is not good, immediately dump it, right? Stock goes down. But rental people, the market never goes down fast. It doesn't go up fast as well, unless, you are like lucky and, find some really awesome location, right? So, repairs, you deduct immediately. If it is improvements, you add to the value of your house. There's something called cost segregation. Like for example, we have talked about your house can be depreciated over 27.5 years. Now, your fridge only is going to last for 5 years. Maybe your roof will last for 15 years, right? So there are different things in your house that needs to be depreciated at different, speed, right? It doesn't save you any money, overall, but there may be situations. For example, you are working for one of the FANG companies. You expect to retire in 5 years. You want to take an early retirement. So you want to reduce your income as much as possible in this 5 years. Maybe you get more and more of your depreciations done now rather than later, right? So these are kind of levers that you can do. The structure can be depreciated over 27.5 years or 39 years. If you have done sidewalks, landscaping, that can be depreciated on 15. Some other things can be like you have curtains in the house that can be depreciated for 5 years. So there are companies that can help you with this, and then you can basically calculate which one can be depreciated faster, which one can be depreciated slower. Okay.
So, question on cost segregation.
Mm-hmm.
If it's a short-term hold, I heard that cost segregation is not beneficial. Is that true?
Short-term rental?
Yeah, no, short-term hold. Like let's say that you only want to hold the rental for 4
Yeah, it doesn't, right? Basically, it's a calculation headache. You pay somebody, $2,000-3,000 to go through this process. If you're not saving anything, it doesn't make sense. Only if you're like in a high tax brackets right now, you have to do all levers to, reduce your tax burden now, that makes sense. Okay. All of these are complex in the sense, depending on what house you have, what job you have, what next you're going to do, all of those things will play into the decision. This topic has come in the past, like, okay, the income comes, you probably spend a few hours to just rent it, and then a lot of options are not available if you're not an active. Okay. So, but if you can establish that you are actively managing, right? There are thresholds, like you have to work for 250 hours, 500 hours, or have a real estate professional license, or you spend more than 50% of your time in real estate activities, you are not subject to net investment income tax. There is a 3.8% you will be paying your tax return on all your investments. Like, for example, you sell stocks, get gain, you're paying the 3.8. If you are a passive rental, you will be paying 3.8 on rental income also. There is a qualified business income, like you can reduce 20% of your income if you call your rental as a business. Right? You have to qualify for it. Don't try to cheat. Okay. And you get home office deduction if you have a business at home. Okay. Section 179 expensing, basically some of the items, like you buy something for you can expense it out the same year so that you reduce your profit in real estate.
Ravi, we need to qualify both 750 hours and also 50%. I don't think so. I think one should be there.
So there is no strict rule for how you qualify. Okay?
So
when IRS calls, can you explain it, and they believe me.
But qualifying criteria is like 750 plus like 50% of your time?
If you, like, for example, you are working for Meta, and if you say I am also a real estate agent, it's difficult to say.
For T-Mobile, it's okay.
So you have to qualify.
Yeah, it's no hard and fast rules. Basically, you have to have like 50% of the time you are spending. Let's say you are managing like 5 to 10 properties, then it's very easy to explain. Not only I work 8 hours for my job, but I am also spending another 5 hours for this one. You say people will understand. So 1031 exchange is something I think you asked. Right? So
Manoj.
Okay. Yeah. So very interesting thing, right? So what it does is basically, so in a best case scenario, what you do is you buy a rental house for like 500, 600K right now. You have more money. You roll your rental property into another property, buy $1 million property. You're not paying any taxes. You're simply moving your current property basis, everything into the new property. You keep doing until end of your life. Okay. Now let's say when you die, your property is $5 million worth. Your property goes to your son. Your son pays 0 tax, because yeah. When somebody inherits your assets, they don't pay any tax. Whatever the value on that particular day, that's what they are getting. Okay. So nobody is paying any tax. Of course, all of this requires a lot of effort. You have to find properties. There are amount of time you have to do.
180 days.
Yeah. You have to find, you have to identify properties within 45 days, close it within 180 days. Okay. There are a lot of, nuances to it. It is something that cannot be explained in a single slide. Okay.
Ravi, you need to add that caveat. Estate
Inheritance.
tax. Inheritance
Yeah.
also estate tax.
Yeah.
Of course, there are limits.
Yes.
Correct.
The way you
Definitely.
say, people
I have
argue
a
that
slide.
it is not. So
Yeah.
that's why.
Yeah.
I just-
Estate.
Under 12 million.
I have a slide at the end that I'll address.
And also these proceedings should be with escrow.
Yeah.
31 escrow.
Yes. The money has to be held with a third party, okay, while you are moving from one property to other property. Okay. So you basically postponing paying any capital gains tax, on this property. Okay. So you are doing depreciation, no big deal, because you don't have to recapture depreciation, right? You are simply moving to a new property. You carry whatever the base is, everything into the new property. Okay. You can shift from one market to other. Like you may have a single family house, you can switch it to multi-family, you can switch it to commercial, it doesn't matter, right? You can, maybe you have a house in Kent, you realize that it's not a good investment anymore, you switch it to somewhere else.
if my capital gains are less than 500k, I don't have to go through all this.
That is only for primary.
That's for primary.
Only for primary.
Yes, for primary, not for 1031.
So, very complex topic, can't go in very detail. So, it has to be executed properly. You need to have somebody who knows how to work through the system.
So, the previous question, right, Ravi, the primary home, if you sell it, the equity is more than 500k, right? So that's whatever the extra money, right? Can we show it as a down payment as some kind of a tax for the next house or something?
No.
For 200 definitely,
Yeah.
like if it is a 1.7 million sold, 200 definitely has to go to the bank.
Yes. Yeah. I'm not aware of any way to offset more than 500.
I mean, if I buy the new house, right, even though we cannot
No.
show it down.
In India it works, right? You buy another property that's within a certain time frame, but not in India.
Ravi, we have 6 more minutes.
Okay. Sure. Next. Okay. So short-term rentals, I'll just take 10 seconds on it. Basically, it is easy to qualify as a business. Okay, like you have an Airbnb or something like that. Okay. Same laws, most of the laws are same, but for you to take advantage of it, but it is easy to explain. Like you are taking orders, you have cleaning, you are coordinating with different people and all that. So with short-term rentals, it's considered as a business. Rentals can also be considered as a business. It can, that losses, you can show losses in rentals by using depreciation. Those losses can offset your W2 if you play it right.
And also we can use home office as well in that case?
Yeah, yes. Okay. So this is basically the estate tax. Okay, gift and estate tax limits. So right now we are here. Okay, so right now it is 13.6 million or so. What this means is each person can give 13.6 million to anybody in their lifetime if you pass away this year. Okay, but the limit will be based on when you pass away. So not so long ago, these limits were very low. Like in 2003, so like 600k. So in Washington state, the limit is 2.2 million per person. Tax rate is 10 to 20%. Federal estate tax rate is 40%. So if you have more than, so if Democrats come to power for 2 terms, they are more than likely to bring it down to a level very very easily, because government needs money. This is one place they can get money. Right? So it will definitely not be at the 13, 14, 12 million kind of range. It's much more, nobody can predict the future, but we can easily assume that, at least plan for it, that the limits will be something more closer to 4 or 5 million. So this is not something you have to worry about today, but something you have to keep in mind. So the 1031 exchange that Hari, for pointing it out, right? Thank you. So it will count. So you leave a $5 million house to your son, that 5 million will count against that. If you exceed, you pay these taxes. Okay, so keep that in mind. It's not like fully tax free, but there are ways to break it down and play. But those are like advanced tax. So you should start worrying about your estate tax if you have $4.4 million between you and your wife. If you have less than that, it's not a big deal. There is easy way to manage it. Okay. These are some of the advanced.
So you might going back to the previous slide.
Questions tarvata malli.
Question there is additional strategy over here. Estate taxes are good, like the limit is going down to half, right? There is the other way. You have one more year if you want to gift it or make it as a estate tax free. Let's say for example total 13 million now. Okay, you are doing like $5 or $6 million gift or estate tax free. You can do so this year, and still you will hold that $7 million.
Yeah, that can.
There is another strategy.
These are
I'm
lifetime.
planning to cover those additional strategies in next class. I'm working with Kuber on that.
Yeah, thank you. So these are basically lifetime limits. Okay. So for example, there is an annual gift limit of $18,000 per person. If it is a couple, it's $36,000, right? So if you gift anybody more than that, it will start counting against this. Okay. This limit will change. But what Hari was suggesting is, you can book. If you have a $5 million property, you can give it to somebody right now and book it. It doesn't matter whether the limit goes down or not in future, right? You have already booked it. So these are some of the things, advanced tax strategies, complex topics. If you have like $1 or $2 million worth of net worth today, don't worry about it. There will be time when you should start worrying about it. Some things you can do, okay? So assets in different asset classes, like I was talking about stocks, real estate, maybe 40% of your net worth in real estate, 60% in stocks kind of thing, just to have options. If you have kids, 18 plus kids, you can give $36,000 to your kids. That will hurt them a little bit, if they will not be able to get, financial need-based scholarships, which most of your kids will not get anyway. So, but so you expect your net worth to be like 10 million or something. You will, let's say 5 million is what is comfortable for you to retire. You are going to be like 8 or 9 or whatever. You can slowly start offloading. This number will not count against anything. So every year you give this money to each kid. Okay, so they start increasing their net worth. Sorry. Another strategy is upstream gifting. Okay, so your let's say your parents are in US. Most of the case probably not, but and you bought Nvidia for $10. Now it is like grown really big. Maybe it's Bitcoin, maybe it's Nvidia, maybe it is something else. And if you believe in holding that for another 10-15 years for reasons, right? Gift your asset to your father or mother. Once they pass away, you inherit it with the tax basis reset. Okay. If they pass away before 365 days, you will again get the basis back. But otherwise, something that can be kept in mind. If you have something insanely grown, and you don't have a siblings who will fight for that money.
Ravi, the limit of inheritance is like again same.
I mean, your father may not have $13 million, right?
No, I'm asking like in hypothetically.
Yes, they will also have limits. Same
limits.
Yeah. But
whichever is.
Yeah. For example, you bought Bitcoin when it was like $1,000. You have 10 Bitcoin or something. Give it to your parent. And I'm not suggesting you to invest in it. But if you want to hold on to it for another 10-15 years, until your parents' end of lifetime, upstream gifting can be considered. Just make sure they are also in US and have their tax ID and all that. I have not explored too much, but can be done. Okay? But can it work across countries? I don't know. Direct indexing. Okay. So S&P 500 has 500 stocks. So I was a consultant for a very long time. I went to different companies, worked in client sites. I wouldn't invest in a lot of those 500 companies. I could easily pick 40, 50 out of it and say these companies are not going to be useful, right? So I could potentially create a S&P 450 or S&P 420, right? Direct indexing. I mean, people like us may not be able to do it, but high net worth individuals, they actually have the brokerage buy like Nvidia, Apple, Microsoft as a basket. Once you have individual stocks rather than one ETF, what will happen is one company, AMD, is not doing well. You take some losses, book some losses against it, so you manage the taxes. If you have just S&P 500, a single block, there is nothing you can do. When you sell it, you sell a little bit of AMD, a little bit of Nvidia, a little bit of other things. Charitable contributions, okay. Bunching is basically if you, let's say you donate, $5,000 every year, you can donate $10,000 on December 31st for this year and next year, right? And count it against 1 year, okay. You can gift highly appreciated stuff. Like let's say you want to donate $10,000 to your village or something. Instead of donating cash, if you donate stock, right? They don't pay any tax. You don't pay any tax. You might have only paid $2,000 to get that stock. Right? So that's another thing that you could potentially look at. Most of you probably will try to do early retirements, right? I'm planning to retire around 55. I'll have 5 to 7 years of time when I will convert my pre-tax 401k into Roth. So there will be a window you'll convert. So plan for it. I've seen people who are already early retired for 2 years and they have not done anything. They didn't realize. Social Security, right? If you retire at 62 versus 63, you get 8% more. If you retire at 64, you get 16% more. Every year you delay, you get 8% more money in your Social Security up to age 70. So depending on what else you have, you could potentially delay, especially if you are going to be living into late 80s or 90s, you could potentially delay it to 70 years of age, but get a bigger Social Security check. Use other accounts, taxable accounts during this time to live so that you pay less tax. So when you get into retirement mode, tax planning becomes a lot more important. You will have money in different buckets. You'll have rental properties, stocks, 401ks. You will have option to choose how much money I'm going to get from Roth, how much money I'm going to get from rental. So you can play to reduce your tax burden. And deferred compensation, like I think it's 69 in Microsoft. Like if you are like in a very high level, the companies allow. I personally won't recommend it. Okay. Premium financing. So again, applicable for people with 5 million plus kind of net worth. You can have, you pay part of the life insurance premium. The lender will pay part of the life insurance premium. So you can actually get life insurance. But the beauty of life insurance is basically whoever gets your money, they don't pay any tax on it, right? So this is one way to, again, may not work, may not be applicable for everyone, but if you have like 5+ million kind of net worth, can definitely look at it. Business ownership, if you have a hobby, having business will allow you to deduct home office, certain expenses and all that kind of stuff. Rental properties we already talked about. Move to no tax state, we're already here.
State tax also.
Right? So trust will come into picture, once you have higher net worth. Like the estate tax I was talking about, if you have like 4, 5, 6 million kind of net worth, definitely makes sense. Their trust do make sense at lower net worth as well. For example, if you have a will, what will is basically, will is a direction. It is telling what to do. It is not confirmed thing. Somebody can actually, but trust is something guaranteed. Like you put a property in a trust, give it to your son or daughter. That's what will go to them. Of course, there is a cost involved in setting up the trust and all that. And I don't think any of us are here, but could potentially invest in art, donate appreciated art, take tax deduction. Because these are illiquid stuff, right? You buy art for 100K, and then 5 years later it becomes 1 million. Like who decides, right? Some people play this game to save taxes.
నేను వేస్తాను అందరికి అందరు డొనేట్ చేస్తారు.
So this is the last slide.
Okay. So just one thing, అంటే లాస్ట్ స్లైడ్ అన్నారు కాబట్టి ఐ విల్ గో దేర్. అందరి దగ్గర ఫోన్స్ ఉన్నాయా? ఓకే. సో దిస్ ఈస్ యువర్ ఆపర్చునిటీ. నా నేను మీరు అడిగిన ఇన్ఫర్మేషన్ పంపించాను. వాసవి సియాటల్ పేపాల్ అకౌంట్. ఇఫ్ యూ క్యాన్ ప్లీజ్ do it before you go because you'll move on to the other things. And thanks for that. And మీరు అన్న Q&A చేస్తారా 10 minutes if you want.
I can stay.
Because I think we were trying to rush. I think మాదేంటంటే by the way guys, I mean one thing, sorry interrupt చేస్తున్నా మధ్యలో, just to be on time. You know how these 2 sessions were. మనం బ్రేక్ కూడా కన్స్యూమ్ చేసుకొని చేసాము because it has to benefit to all of you. And also whenever we do, at least my team we main decide చేసామంటే your time is valuable to us, right? So మేము దాంట్లో flyer లో 2:30 నుంచి 6:30 పెట్టామంటే 6:30 we want to kick you out of the door. I don't want to waste your time. So ala we are trying, that's why we are trying to make sure that we are on time and focus on the main topics, and that's why we covered the first session from Praveen and then Ravi garu. We have a lot of he kept it humorous too. I mean people 3 hours 3.5 hours కూర్చోబెట్టాం కాబట్టి this is amazing. It's like going to a college or university for so many sessions and then learning all in just like 4 hours. You can go back to the YouTube thing after you have done the PayPal stuff and then you can ఒక్కోసారి జూమ్ చేసి వింటే మనకు ఒకసారి మళ్ళీ ఒకసారి వినిపిస్తుంది కదా. సో వాళ్ళిద్దరు సెషన్స్ కూడా వీ రికార్డెడ్. సో థ్యాంక్స్ టు వెంకటేష్ అప్పల ఫర్ హెల్పింగ్ విత్ ద ఆన్లైన్ థింగ్. సో థ్యాంక్ యూ రవి ఫర్ టేకింగ్ యూర్ టైమ్. రియలీ గుడ్ స్ట్రాటజీస్. అండ్ చాలా మటుకు ఆయన చెప్పిన దాంట్లో యునో ఇట్స్ సో మచ్ ఆఫ్ ఎక్స్పీరియన్స్, ఇండస్ట్రీ ప్రాక్టీస్, అవన్నీ హీ కైండ్ ఆఫ్ పుట్ ఇట్ ఇన్ టు దోస్ థింగ్స్. Sometimes maybe I mean, we all know how to do it, but you know, you have to take that hint. I don't know if you share when we share the slides for each of them. First, then you can kind of do your Google search, and then probably is there a way to ask? Is Vasavi Seattle a better way to ask, or Classifieds a better ways to ask the questions, or
anyway,
where do
you can do
or investments? Is investments a better place? Can we do that in the? I don't want to do that in the stocks because people want less this one. So let's do it in the investments group or something for any of the questions, and we'll try to follow up. So last 10 minutes, don't take more. Do finish your PayPal thing and then ask questions. Thanks.
Say your name.
My name is Sandeep. You just discussed about tax loss harvesting, and you did say like, okay, sell AMD today and just buy it after that. Like, rather than doing that, like, what if I sell QQQ and then buy BGB on the same day? That still covers
statements.
Okay, guys, no leaving out of the door. After 5 minutes, closure chesaru. So it was I interrupted because if he says done, you'll all be leaving. So give 5 minutes. Please respect the presentation. Okay, 5 minutes.
So IRS doesn't clearly explain exactly what the line is. So QQQ and BGQ are considered sufficiently different. Okay. But if you buy QQQ and then QQQM, they are considered same. Right? It's basically whether can you explain it to IRS. That's what it is. Also, all brokerages won't track it. This watch shells on their own. Okay, they do it within the account. But if you have some stocks in Fidelity, some in Vanguard, it is your responsibility to report it, track it. Okay. So, any other questions?
Yeah, my name is Sudha. Just one question. So, when you sell your primary home, let's say after a year, you moved out and you rented it for a year, then you sold it, and you used 1031 exchange because you just want to keep investing that money. But if you make like 100K out of it, like profit, or like maybe invest less than 100K of what you made into your next property, can you write that off as part of your primary residence sale tax deduction? Because it is still within that, like within just 1 year, like prior to 1 year, that was your primary residence, and up to like 500K, you can write it off. So if you don't invest all of your money as part of 1031 exchange, the balance can be write it off.
So 1031 is only for rentals, not for primary house.
Yeah, but I mean, if you rented it for a year, so technically it's a.
So, like you kind of combined primary residence and.
I'm trying to see like if we can combine that.
Yes, the same house can become rental and then primary house and back and forth, not a problem. Okay, as long as you lived for 2 years in that house in the last 5 years, you can use the 500K. Okay, right now if it is a rental, you can use 1031 and roll it off to another property. Let's say your current property value is 900K, and then you only found another one for 750K. Let's say that 150K you will pay tax on.
Yeah.
Okay. But if you buy larger, you roll it. You are not paying any tax, and then you keep rolling it into a future property.
No, what I'm saying is, let's say like I bought it for 800K. Today it's like 1 million. Okay. So I put it under 1031 exchange. I sold it. So I got 1 million. So I want to invest 900K of that 1 million into my next property as a rental property. Right? So that 100K is left. Technically, I have to pay tax on that.
Yes.
But because this is like this house was my primary residence a year ago,
you cannot let two both. There is one exception. Like basically, if you are moving to another city because of health reasons or job or something, that instead of 2 years, there may be an option to get that 500K credit. Like you are forced to go to Dallas or somewhere. You have not lived for whole 2 years. There are ways to probably look at use that 500K deduction.
So for 1031 exchange, if you are taking a direction before, can you also take the same depreciation after you do the 1031 exchange? Already taken the depreciation prior, and then you did a 1031 exchange. For the new home, can you take the depreciation?
Yeah.
Okay, that's it.
One other question. So under section 179, so if I'm purchasing a vehicle, let's say, can I, like if I'm leasing it, not purchasing it, can I still write off the entire value, or if I'm leasing for 3 years, can I write off that value, or is it only the payments that I can write off?
So, if the vehicle is used completely for business,
Yes.
then only all the expenses related to that.
Okay. Yeah.
So if you are just using it for 15%, 20% of the time.
Yeah, I get that. Like, assuming that it is for business and used 100%.
Yeah, then have the vehicle leased from the business itself. All expenses related to the vehicle goes to a business.
Okay, so if I'm paying, like leased is monthly payment.
Hey, last question. Okay, because we'll wrap it up because we're yeah. Any other last question from anyone else? Okay, very good.
Okay. Thanks a lot, Ravi, for sharing your wealth of knowledge with us. Some final comments so before we move on. So let's give a round of applause to everyone. So I wanted to call upon stage Ravi Garu and then I also Anil Garu. Sorry.
Anil.
Yeah.
And then money. No. You are the backbone. And then education committee, one of our members.
All the chairs also. Anand.
Project is which object?
Over.
Rama.
Fold.
Narration.
ఒకసారి అక్కడ పవర్ బటన్ చూడండి పవర్ ఆన్ అక్కడ పవర్ ఆఫ్ చేస్తుంది
ఓకే ఒక పిక్చర్ ఓకే
ప్రవీణ్ మధ్యలో తీసుకురండి
టచ్ అండ్ ఫీల్ ఓకే Thank you all.
So we're gonna have few more sessions. Now they're like we have like lined up for the whole. I would say probably next 12 months we have lined up the events. I think the next one is going to be on investments. When there's so much of interest. Today's was about stocks, trading and stuff, right? There is one more with the investment itself. I think Ravi also touched upon under the bed. Continue after the picture.
We missed Harry, so we want to have a picture with him.
So next one is going to be by Prasad Kapparabu Garu. It's going to be on investment specifically and also passive and long-term investments. So as well, I think he has done it one session in the past, but I think we're gonna have more and more content from that one, and then I think we're gonna have a blast with that one too. I don't think this room is gonna be enough. That's what I'm thinking, but we're gonna work on it. We're gonna send you insights, and we're gonna send you the details. We are already started working behind the scenes, and one more session that's gonna come up with by Hari Garu. So basically, because there are so many questions on ILUs and so many other investments, insurance kind of products and stuff. So we're gonna have another session on that one. So we're working on another session with one of the topics I keep talking about is we don't have a good speaker yet. Is like empowering the women with the financial knowledge. So that's gonna come up before sometime in March, April time frame. And then there's so many other topics that we're working in the background, but we're gonna send you all the information as and when it's available. And we are co-hosting the events with Rama's events mentoring sessions as well. So Rama, if you have anything you wanted to share, the upcoming ones, please.
Maybe I will keep it quick. I think if you observe the session mostly today, you are in a job, you are making money, and how do you appreciate it? How do you invest it? How do you save the tax back? At the same time, like if you remember Ravi saying, like if you can spend like 6 months and lead code or understand somebody who made a great transition Is there a way you can increase your primary income itself, right? So that's where some of our sessions are going to focus. We're going to have a 5-side chat with 2 leaders who are actually holding a great positions with the FANG companies, but took a bold step, came out of that, joined the startup and leading the teams. If you listen to them, you might get some motivation. So then you can also apply some aspects in your primary income side as well. So if you look at the kind of topics we are coming is primary income, investment, tax loss, all of them. It's a really nice connected themes, very nice to collaborate, and we have a great session lined up. Sure.
Thank you. And then before you leave, we need a lot of help.
Just
I wanted to thank Anil Garu for opening the doors for us. Now we have found another venue for us. And then finally, thanks to both of you and all the team who put together this one. And before you leave, we really need help. As said,
What all you need help on? Like
so
anything
we have
that
to put back
you
the
see
chairs.
that should be in the trash there, and then chairs.
First
Just-
is the trash, yeah.
So papers
So yeah, we need to keep